on if we don't hold this now.
Yeah, I'm live. I think I put it in the wrong thing. Oh, what'd I get? 46 cents. What the heck? I'm going to add some right here. $0.39. AMC hit my other support. Let's see, big. I heard it again. Sounds like somebody's taking a picture of me. What is that? Drop, baby. I'm a little bit above even now. Let's have the breakout. I mean the pullback. Now, Mike, I'm using your fibbies today. Okay, we got an inverted hammer. AMC. We're at 48. I got plenty of calls. There it goes again. I gotta know what that sound is. Y'all hear it? I hope you ain't fucking with me, Mike. M&Ms are messing with us. Okay, we're at the VWAP, spy at the VWAP. Let's see if we can break below it, then we're off to the races. There it goes again. Okay, now Nancy, I've told you about taking pictures of me when I'm trading. Inputs, spy at VWAP. Let me see if I take these headphones off. What is that? I'm gonna mute this thing and see if it... I don't know what that sound is. Ah, this thing's acting weird. There we go. I finally figured it out. It's this damn thing here. I had it on this, and it was taking pictures of me. So I don't know where they are. I thought I was losing my mind, Mike. Anybody in these puts with Bobo? Yoko? Come on. I guarded bull soldiers in 3 minutes. Jim has a spirit in there. Jimmy. Ricky isn't muted. Oh, okay. He is now. It's in my ears. Spy pulling back. No, I'm in calls. Oh, damn it. Why? $200 SMA. Dadgummit, it's doing it again. Okay. I'm gonna redo this thing. I don't want to hear that all day long. I'll just take it down and redo it real fast. I know I'm famous, but jeez. Profit, take profit. We hit my 525. We're at 58 cents. We can go and hit the 200, but this is the 50% retracement. I'm using the Fibonacci today. And I always say 50% on a breakout. Got a fallen wedge on AMC, but I don't think people are going to want to trade this today. We still get this 200. I mean, we got the pow today. We broke out prematurely. The market doesn't care. The market doesn't care what Powell's got to say, I don't think. Or I do think. Should I take it, Mike? The paparazzi. Now it's going to come down and retest again. I'm still wanting that 200 SMA. I think I can get 65, 70 cents out of this. And if I do that, I'm off to the beach. I'm telling you, I got some new cologne on. They're going to love it. We broke out of the snake. I didn't want to see that. So I scored some, but I'm still holding on a little bit here. Come on down. Have a fake out.
Ryan, you should have great shoes in your basket thing. Fix yourself.
Okay, we see here. Somebody's got their mic on. Franchise? You got your mic on? Whoop. Oh, I don't want to block you. Go away, little girl. Get your shoes, boy, and put on new socks. Your feet stink, my son. They got halted. That's a problem. Spy getting back to the VWAP. Come on, baby, break out. Tesla calls, trying Tesla calls, lunch lady. I want to try CLSK Scout, Randy says. We're at the top of the bull flag of the Head and Shoulders. I'm getting ready to break out. On the SPY. Falling wedge. Oh, this is the SMA. Shit. I got to do it on the other chart. Hurry up. Hurry up. I should be looking at other stocks right now instead of trading this thing. So the SPY, we're getting up here to a 1, 2, 3 on the SPY. And we had a little snake and we pulled back to the 50%. We pulled right back to my support level there at 526.15. Pretty close to it, and I got out of the trade. Now I'm looking at a triple top up here, or a head and shoulders on the 1 minute. Now pull up the 2 minute. I got to clean this up, get that Fibonacci off here so I can see it a little clearer. So we got a little head and shoulders here. If we don't hold the VWAP, I think we can come down and hit the 200 or a double bottom. I'll move this up to the double bottom. A lot less volume in GME right now. Yeah, there's not much volume in this thing today. Not seeing the big guys in here yet. We got a 1, 2, 3 on the bottom, and we got a 1, 2. We're squeezing right now. Let's see if we can break this 1, 2, 3 and have a big boom and get out of the trade. See, we just broke the resistance. We got a 1, 2, 3 and 1, 2, 3 down here with the wick. So now we stay above this. Above the 9, we can shoot up to the 63 EMA. And SPY, we're getting ready to retest the shoulder line, so this is going to be a critical moment right now. Where's my platform here? I'm going to come back down to the 525 puts at $1. Get 10 of them. Oops, that's why puts at $1. 2323, I think counting. Always clean this Jim. Is this my accountant? You say you saw a flaw in my tax return. You owe me how much? $50,000? Whoop, whoop, whoop. SPX, the debt. Oh, why? Excuse me. I gotta get my marbles back together here. This is May 16. At $1. Target 525. I don't believe this market, man. It's so crazy. I've never traded in something like this. Never. There's always something new, that's for sure. Now, if we hold a VWAP, I don't know what to think after that. I have to go very bullish. Oh, I don't have it in there. Shit. We're retesting AMC right here. So I'm putting that right on that body, and that's my resistance. This definitely right here. We got a lot more red on here now. Where's SMCI? Man, I'm missing a lot of tickers on here. Come on, don't break. It's up 33 bucks. I'm definitely fighting against the tide. You got the right shoulder got hit twice now. So this is it. I mean, this is the big reason here. If we break here, then we're going to go ahead and break out. But this is the right shoulder hit twice. That means this is the sweet spot. I could add 93. I think I will, just for the fun of it. We're at the sweet spot right here. I got a doctor's appointment. eye doctor at 11. Oh. AMC's not holding up too well. This might break out. Man, it's strong. God. It's slowing down. QQQ broke out. The IWM's pulled back. Knife. It's a big old knife. They really think Pow Pow's going to give the interest rate cut, and then boom. They want the interest rate cut so they can get another leg up on the tech stocks, but I mean, they've run up so good. I don't see. I need 94.5. 96.5. Uh-oh. We got NVIDIA hitting the top of the resistance. It's crazy. There we go. Jimmy's going to have to stop out. So I'm going to put a stop loss if we break the double top here. Get out. Lily. Lily, nice pop, Mike. You probably already know that. Damn, AMC's going down. Can't beat the fat cats. Good job on the video. I got 965 average. And now we're bullish because we're above the double top. So if we break below it, it says it's finished on my indicator. Lily. PLTR is down 21 cents. Said Jimmy would have been a great short. Boeing down 344. I did a video this morning on Boeing. They tried to pump it up again this morning, CNBC, and I said, you ain't getting away with it again. They're under investigation now by the DOJ for not doing good during the 747 crashes. Come on, I'm waiting. Is anybody inputs with Bobo? Good morning, YouTubers. Sorry I turned it on a little late. I'm in SPY put right now. I want to see it hit the VWAP, and if we break the VWAP, we'll have a double bottom down here, and that's where I'll probably exit the trade. We could hit the 200. Right now it's kind of bullish, but if we break below this here trend line, that'll show a little bit of more weakness. There's a lot of good buys coming in here. I think they're no matter what Powell says, they don't care. The market doesn't care right now, but it should. So I cost average down. I should have got more, but I didn't want to throw any more money in this thing. Get rid of that over here. I don't want to look at the cannabis right now. So AMD's up. Dell's up. Amazon's got a double bottom out of a snake. Asbury 6 turned all positive on May 6th. Coins up. Bitcoins are up. BITO's up. Man, look at that breakout on BITO. And Boot, that was another one. Earnings. They must not have been good, but it bounced back. We got CrowdStrike. Everything's breaking out. CRM. Jeez. Not so hot. I've been in this way too long. DraftKings up 90 cents. At a resistance level. I'm still hold on to this thing a little bit longer. But it's definitely not in my direction right yet. We've got a double top, triple top. 1, 2, 3. So this is it. This is the final stage. No, that's it. I'm done. New high. Watch oil in the market in general. Israel Netanyahu stands firm. Yep. Crude inventories. I think you're nuts to short. Yep. I think I am too now. But this is Fed day, man. Lily going to double top here. Meta at the 200. I'm going to hold on to this SPY. I think I still have a chance. I could get nasty with it and add 70 cents, but I ain't going to. It ain't a smart idea. I had a triple top break right there. God.
known event risk situation like earnings. If earnings do come in nicely for the bulls, the next point of potential resistance could be that pink line near 423.45 that represents an old high from back in August. To the downside, yellow 21-day EMA, that could be a supportive area. Then we've got our orange 63-day EMA, roughly in line with our trend line, right around like 396 or so, Oliver.
All right, it kind of looks like a engine turning on, you know, kind of slowly but steadily. The fact that you've got the RSI that's continued to put in the higher low there, and then with a lot of support below us. I mean, I guess it's a test of if we can get through 415, Rick. That kind of seems like the big level here.
Yeah, 415 seems like the important point to beat. And we can also see another
I keep
thing,
buying it
is
in.
that there's a volume node up near like 437 or so, right around that point. 435, let's call it. That's probably a closer area here. But that would be another area to look for potential resistance if things really do start to take off here. That would roughly be in line with the top of our channel as well. So keep an eye on that.
Okay,
area
I'm going
if,
big time
things do
now.
start to take off to the upside and break out.
All right, so first things first, let's see if we can get through that 415-ish to 423. All right, deer looking pretty solid here, not bad. Looking chart, kind of fits with some of the fundamentals, it seems, that maybe have not been great, but solid enough. All right, last one, Under Armour, a company that oftentimes bombs on earnings, but can be volatile in both directions if things do improve.
They do have a history of bombing on earnings, gosh, and I would say that things aren't really expected to be much better this quarter. Revenue is expected to contract 5.5% roughly year over year. Bottom line is even more significant, expected to dip around 61% from a year ago. They have a 4-quarter earnings surprise to around 68% on average, so I mean, at least in positive territory there, but they've overall been able to outperform estimates for bottom line by about 73%. Again, or last quarter we saw they outperformed expectations by about 73%. So hey, maybe we could see some phenomenal upside. But North America, which is their largest revenue source, has been underperforming. We've also seen, I mean, like this challenging wholesale environment, no doubt, but they've been trying to undergo this company transition to revive some of this North American interest, and it just hasn't necessarily been paying off. And I was reading this note that said it's because the overall shoe and apparel market is just so weak. But we heard from On yesterday, I know very different companies, but I think that there's too many competitors in this space. Like right now, you have these new brands that have seized so much consumer attention. The names like Under Armour as well as Nike start doesn't look too great either. They just seem like they're the names of yesteryear. Not to say that they're not obviously huge companies, but you have really strong competition that's come out in the last couple of years.
That's why they're not posting big growth. It's all going to On and Lulu and others.
No kidding. Gosh, I would say the one thing that is positive, gross margin expected to improve, but they're raising their costs. So that also then weighs on demand. When you are right now the I would say more seasoned of the apparel retail space, and you're not able to keep
Niall took a big knife.
Your product is just not as favorable as it once was. I mean, I think this is a cyclical trend we've seen with Nike as well. We have to discuss this could be just a different period for Nike and Under Armour's growth.
Yeah.
It has been actually for the last several quarters.
Absolutely. And then Under Armour's had management problems and shakeups, and it's just been a pretty miserable trade, to be honest. Chart-wise, okay, Rick, go. I mean, down to dump still basically.
Largest percent decrease since
Probably the
2007.
worst chart of the three today, yeah. And we can see that there's two things that stand out to me about this chart at a glance. The first is that we made highs near 950. Then we did not really make our way close to taking out those highs. That was the precursor to an eventual drop off here. The other thing though is that we didn't take out our lows during that downturn here. So we had our yearly lows come in at 629. We bottomed out in April at around 643. So the fact that we didn't take out either of those extremes is worth mentioning, I would say here. We did have about an 11% drop off in March though. Since then we've been trending downward. You can see that blue dash trend line there, kind of bouncing around a volume node, a spike in our volume profile study there near like 675 or so. Anyway, those lows near 643, that's the mark to watch to the downside. To the upside, we've got our post gap down highs near 755. That's our red dash line. We've got our 63-day EMA in between. So those are some areas to watch, Oliver.
All right. Seems like a lot of overhead resistance for Under Armour per usual. I mean, It's basically a question now of can we hold the lows rather than think about really moving upwards. The calculus seems to be more about trying to keep Under Armour intact above the 52-week lows. Thanks, Rick. Thanks, Jenny. Okay, good look at some of the earnings coming up for us. We'll take a look at one report that's already out. Monday, Spreadsheet Biz and Planning company is up pretty good here, about 20%. We'll give you the latest on our developing story as we prepare for an extension of the stock rally as a whole. Our market meetup. We'll take a look at the NASDAQ, up 80 basis points right now. Tech, green with the exception of Tesla and Amazon.
Schwab Bank Investor Checking, the checking account built for investors.
Well.
And client satisfaction.
Might have to give myself a big F on this one. Just too much. And I got to go to the doctor here soon. So I'll be sitting on the What's this? I'm gonna plug this in real fast. Here comes some more buys. And be right back. Skip, baby. I got 83 average. 30 contracts.
X, I was taking a look just in the past 2 hours alone. I saw 10 posts. I'm not sure what any of the memes actually mean. I really just wish he would come out and say what he means versus, you know, posting these cryptic videos. But it doesn't seem to be igniting the rally. If you take a look, though, GameStop shares
Oh,
still up
don't
very
speak too soon,
significantly,
honey.
excuse me, on the week, up 93%. AMC shares up 77% on the week, and that, of course, today's sell-off comes after that debt for equity swap that AMC announced. So less and definitely more short-lived retail interest in not seeing those stocks, you know, catch any bids today. But overall, a pretty good day. Really think it's consistent, that CPI report, consistent with the notion that the Fed is going to cut rates next. Not necessarily soon, but at least a cut is in the cards.
Just a thought of it.
Market here seems like it's getting a lot of what it wants. Earnings were okay, and we got through them. Nvidia is still ahead of us, but the market now with the macro support, George, it seems like it's ready to push Nvidia again, even without earnings this week. Still a week away, but we're at $940 almost for Nvidia. So it seems like good times are back here, basically.
I mean, I think so, at least in the near term. I mean, I think, looking at the equities, obviously, I think the interest rate impact is there because if you consider 2-year yields, in the past, few weeks or so, they've been falling right now around 4.75%, or roughly speaking. That suggests, 2 to 3 cuts, somewhere in that range, expectations. And that's obviously a positive catalyst for the markets. Looking at things the Fed can't control and can't control. I'm just going to talk about the CPI for a second, but obviously, both of the headline and core numbers came pretty much in line, and they're close to equilibrium. In other words, the core and the headline.
TV's drowning me out.
Interesting things about it, if you look into it. Just looking at a group of consumption and services. Obviously, services is still impacting inflation because autos themselves were down about 6.9% year over year, but transportation.
How do I sound now?
Were higher by 11%. So, that's an issue that the Fed really can't control. Obviously, there's.
Come on, SPY, get down there.
Labor, that's adding some, additional pressures to this deceleration of inflation, which is unfortunately taking longer than many had expected. But nonetheless, the market.
Everybody's going to trip out when I get like 200% out of this trade.
There's a potential, cut coming in near the end of this year. And I still think there is
I'll trip out.
A mathematical cut in rates, probably around 2 to 3 cuts. So it's not necessarily an economic.
I don't want to hear about cuts.
That's the cut we don't want to see, but purely based on the decelerating trends in inflation.
The SMCI flying. Them rate cuts, boy, these stocks are going to fly. If that's what they think. And I'm saying the same thing. I think they'll come out and give one. I talked about that yesterday.
for those Fed rate cuts. And I don't know if you saw, but the BMO capital markets strategist just raised the S&P price target to 5,600 by year end, saying the April slide might not have been the worst, but at the end of the day, thinks that this market is one that's going to move higher. They underestimated market momentum, so there's some bullish calls on the street.
Okay. Appreciate it, guys. Good stuff. George Tillis, Caroline Woods. Good way to close this out. Thank you very much. Morning Trade Live, that is it. Trading 360 up next. I will see you for Market on Close, 2 p.m. Chicago time.
Every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free.
My target's going to be the VWAP to exit.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction
If we get there.
by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions.
This is all about luck
designed
now.
for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees. And enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Start your morning with a full dose of headlines, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Yep, I'm about done. Apple has a new high. AMC's at resistance. I'd like to see 580 on it. I'm holding. Oh, God. Always clean. May I help you? That's a good idea, Josh. You got a rising wedge on SPX. Pretty clean. Pretty wide one too, wide mouth one. We're at the 1, 2, 3, 4 on the bottom and the 1, 2 on the top. I got 25 more minutes and I gotta get. What's this? What the heck is that? Oh. The shares are trading lower. This is today. That's what it says. Don't look at me like it's trading lower on bad earnings. Worse than expected earnings, sales result, and the thing jumps up and breaks out on bad earnings. So that's a hard market to predict. New high on the SPY, and I'm at 59 now. If I pull this off, I'll be a miracle worker. Nile broke out of the snake, but I don't trust it. WBA down. Not good. So I got a special song I'm going to play for this. Not good. So I got a special song I'm going to play for this. Ooh, baby, go.
Q3 environment, a higher for longer messaging last year before Powell's pivot. Risk markets had a really difficult period during that phase. You go back to April, where we had to reckon with kind of a higher
Actual estimate for April the 24th.
Shoot up again. Risk assets had a hard time digesting that. So we just think that bond volatility, as much as the level, is something worth watching in terms of how that flows through.
The S&P NASDAQ hit 100 all-time highs.
Look at your recommendations and how they should maybe have asset allocation with bonds and equities. What would you recommend?
Yeah, so we would still think in terms of a duration call within fixed income that we would favor slightly short duration. Now, of course, that's going to ebb and flow on a day-to-day, week-to-week basis, but we just think that nominal growth, if that comes in around 5, 5.5, even 6%, kind of depending on where that GDP and inflation numbers where they shake out, we still think that's suggestive of a higher 10-year yield, something that should be more on the order of 5%. And in that case, you want to be a little bit shorter duration. Take that 5.5% Fed funds rate, or your 5.25 money market type rate in this environment. Continue to sit and knit in sort of the shorter duration, and then wait for that opportunity as yields push back up towards 5, towards sort of fair value to get longer duration in that environment.
And what about the Mag 7? When people ask you about the Mag 7, what do you tell them?
Yeah, we still think that concentration within the S&P 500 is a concern. You look historically, all the examples would tell you that this usually doesn't end well. Obviously, the companies have continued to produce pretty strong returns on balance, and if you look at the performance of the Mag 7 this year, call it roughly double the S&P 500. So it's still continued to do well, but we would start to de-emphasize that in portfolios. So we've talked about kind of an equal weight approach to the S&P 500 versus a market cap weighted approach. Looking at smaller cap stocks, and then even looking at non-U.S. stocks in this environment.
Oh yeah, non-U.S. Another point. Just any final thoughts? Because I mean, it could be the non-U.S. thought or anything else that you think about that maybe I didn't ask you.
Yeah, sure. So I'd say non-U.S. right now, if you look at the manufacturing PMI data from some of the cyclical parts of the global economy, even emerging markets, you look at export growth year over year. It's not great in absolute terms, but it's certainly bottoming and starting to inflect higher, which generally speaking, you go back historically, that tends to portend a pretty good environment for non-U.S. stocks relative to U.S. stocks. So we think that there's a relative value kind of trade to be had there. And if you look at valuations, certainly
SMCI keeps flying.
U.S. stocks at elevated levels relative to non-U.S. stocks at more reasonable levels. So we would look there for opportunity.
A lot of room for it to climb.
Thanks for being here. Always love when you're here in person. Appreciate it. Andrew Price, CFA of Crescent Grove Advisors. Thank you. Plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes to the technicals. Don Kaufman takes us through the trades for Target, Pfizer, GM. We'll want to hear all about it. Trading 360 on a record day on Wall Street on Schwab Network. We'll be right back.
Bitcoin up 3 grand. Well, I hate to leave you all in the raw right here, but I gotta go soon. I don't know what happened when I get back. It's probably my worst day of the year. It is my worst day of the year. I don't have them very often. But it's definitely my worst day of the year. So we're, what, $4? Golly, man, we're really breaking out on this thing. I did not expect that today on Wednesday, but it's a huge breakout from 524 to that's $3, through almost $4. That's a huge breakout. Plus a gap up, gap up, gap up. Big old week here so far, just in 3 days, 4 days. Tuesday, Wednesday, 3 days. Well, that's a month. Jim, get your shit together here. Da 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 da. So who's going to bet that I come out of this thing green? Mike? No comment? I'm my spy. I'm going to have a limit on $1,000 loss. I don't want to do that. I'm going to go get my lunch ready. Are we supposed to eat before we see the eye doctor? I'm going to still say we're going to go to the VWAP on this thing. But it's a long shot now, for sure. I should grab just a bunch of this crap. But then I'll really be regretting it. Right now I'm playing on hope.
do you think it's headed, Don?
It's funny because this is exactly what I'm looking at. It's what I would term the turnaround story. So exactly what
Pfizer.
it's coming off the 25 level. It needs to clear the 30 handle, right? It's got to get above $30 to really confirm, you know, some degree of sustainability, if you would, to the upside. So this is when I'm actually pulling out a bullish trade. I know Ben might not like that because looking at the chart, it's nothing but ugly out there, but eventually it's got to have some degree of a turnaround story. Again, clearing 30 would be the confirmation, in my opinion. This trade, well, I got to tell you, in terms of a time frame, I'm a little bit less certain here, so I'm actually moving all the way out to July 19th. Giving myself a little more
okay to
time on
me.
this front. But the bullish trade is a call spread. I'm just going to buy the 29 call, sell the 31 call. It's done for a 60-cent debit. So it's $2 wide call spread for a 60-cent debit. It's a bit of an upside shot. But as I said, you got to clear that 30 handle to really confirm that we're going to run a bit higher on Pfizer in the near term.
All right, and what do you think, Ben, when you look at the technicals on this?
Don, I think on your tombstone, you're going to have written the ultimate contrarian, I feel like, right? This is another example of a stock that has a bit of a different situation playing out when you're talking about short-term versus long-term. Taking a look here again at Target, we had a short-term weakness, that long-term strength. Here in shares of Pfizer, we're seeing short-term strength, long-term weakness. So let's just dive into the more granular time frame and start off with a 1 hour Kemp chart, strong rally that we saw. This is also a good example of those two phases of development and how that imbalance gets created. That creates the vertical phase, and it also is an example of how once you go from that vertical phase, you transition back into that horizontal. Here you're going to see that play out 3 times. Earnings was the catalyst up and through that $25, $26 level, balanced out around $27, $28. Another breakout here again to begin the week, and here we are holding above this 28.40 area, retesting the most recent upper extremes. But as I mentioned here, short-term strength, intermediate to longer-term weakness, retesting an upper extreme of a range that we've been in. You can see that trend to the downside, top left, bottom right playing out here. Let's just establish a couple of the areas that formed on the way down here. Don's got his eye on the $30 level. I can see why, right? It's recent highs that we saw back in the beginning of the year. I'm actually looking at 33. I kind of see that more as the line in the sand. But yeah, I got my eye on this area here right now. A little bit of momentum up and through 28, so we could
33.
see some price activity work its way a little bit higher here, but still remain in this longer-term trend to the downside because we're in this
if we break this
overlapping
30
consolidation phase. We have an upper and a lower extreme pretty well defined, but this middle you can see is kind of a pivot zone right around 28. We're kind of working our way through that. We've got a well-defined trend lower here. As you take a look at the longer-term chart, we've gone into a daily candle chart here now. We're looking at price activity all the way back to the end of 2021, beginning of 2022. So lower since the start of that 2022 spike we saw up to 61, 62, just shy of that $62 level to back to 26 recently. And again, as you can see, currently balancing around
pull a rabbit out of my hat.
Line in the
Yes,
sand
I can.
For the upside would be 33 before that trend gets invalidated. But as of right now, Nicole, looks to me like the Bears are still in charge here.
Yeah, it's really interesting because a lot of, and I love these charts.
God,
and I love how
what
you
a
put,
frickin'
some
breakout.
Of the key points there. You know, 2024 was supposed to be a year of healthcare for investors, and it's been somewhat mixed. I mean, when you look at Pfizer, that certainly hasn't been a great performer for folks. Final thoughts here, Don, on that, and then we'll get to GM.
Yeah, no, first of all, Ben, I was raised by bears, man. They were raised by traders, so you can understand the contrarian stance. Again, the last thing I would say about Pfizer, you know what? I tend to agree. It has been technically the year of healthcare. I mean, look at stuff like, you know, Eli Lilly. Pfizer, as I said, it's going to catch its bid. It's going to catch its move to the upside. And I think now might actually be the time.
And last but not least, let's get to GM. Your thoughts, Don?
Yeah, here's one where, unfortunately, I am not bullish. I am absolutely bearish on it. It has a lot to do with the competitive stance. I mean, they're competing against something like Tesla right now, which everywhere I turn, I mean, this is completely anecdotal, but everywhere I turn, that's all you see on the road right now. And
really?
I'm talking much more.
Where do you even live? I saw one today.
To electric vehicles and struggling in doing so. Like, it's just an EV disaster story. And again, we also have the consumer that's talking about trading down. I would have to think that high ticket items like vehicles, you know, expressly from General Motors, this is really going to get hurt. And that's just not going to be an easy scenario moving forward, especially into summer. Even though it's driving season, it's going to be a tough sale right now. This one is going to be a bearish put spread again. I'm going to go out to the August 16th expiration. I'm going to be buying the 44 puts, selling the 40 puts. So it's a $4 wide put spread I'm buying here, which is substantial.
Come on, baby.
For a 40 some odd dollar stock.
Prove these people wrong. Prove me wrong. Prove me right.
Predicated on the idea where the transformation to EV has really stalled out and will continue to do so as competition mounts in the EV side.
Yeah, unbelievable. Okay, look, and maybe you thought that the tariffs on some of the EVs could help GM, but apparently, some of this is already priced in. Last thoughts, Ben. On
Could be the 1, 2, 3.
Go back in the day in the S&P pit, there used to be a guy who was notoriously short, right? And the joke was always the longest he's ever been is short 10 contracts, and Don kind of fits into that category.
Yeah, I don't like that.
I feel like one thing that's
that can be a hard support right there.
3 for 3 agreeing on stocks. He was a little bit concerned. Today we're going to go 0 for 3 for Don, so you'll be happy to see. I think this one's very bullish here right now across the board and across multiple time frames. And you're talking about GM firing on all cylinders. Let's begin first and foremost with the hourly, where you can see behind me we're talking about two really well-defined areas of consolidation. They're formed, 42.50, a breakout up to 46.17, and then balance forming around 45. No rejection of this upper level. That vertical move up was created by the imbalance that the news from the earnings catalyst provided. So again, acceptance of a recent rally. Taking a look here, you're going to add a little time on now, and you're going to see we've gone from an hourly candle chart to a 4-hour candle chart. So we're looking at price activity all the way since
MC's working for me.
The year, middle of January. You're talking about 36, 39, 44, just three areas that my eye was kind of drawn to where the market sort of started to consolidate, but you can see staircase type pattern playing out here, migration of value to the upside.
We break this resistance, we got the 200 for the exit idea.
Back to October of last year. And again, just sort of looking at these areas of value that continue to form at higher and higher levels. We're inching our way towards the upper extreme of one right now, holding above 44, but recently from 26 to, well, near 47, no rejection of this upper level as of yet, Nicole.
Yeah, thank you for that, Ben. And Don, when do you think the Fed may cut?
I gotta go.
It may change some of your views, if at all.
Think of me when I'm
cut,
get my eyes looked at.
September, December.
Look, I know that the Fed fund futures are actually right now displaying September. I would push it off. I think if we are going to see a cut, it's not going to be about inflation cooling. It's actually going to be about the consumer basically dying and the threat of stagflation. And that's really what I think we're going to see this summer. That's why I literally selected Target and GM exactly on that notion right now. I am not bullish on the consumer going into these summer months.
Great to see you both. John Kaufman, Ben Lichtenstein, thank you always for the big three. Appreciate it. Thank you. Coming up next, spotlighting Airship AI. And its president will join us to go over its earnings report and much more. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
And I care.
The only person that matters in this deal right now that has any relevance to it is the Supreme Leader of China. Only he can decide what he's going to do in the TikTok situation. The management of TikTok are irrelevant. They don't have any say in what's going to happen. If all you're getting is 170 million name mailing list and a brand called TikTok, that's not worth much.
The
So
three
I
white
think
soldiers
they're
are probably going to have an extension to the upside.
All the content that's been generated, some of the algorithm, I don't know how much, or if any, and then it starts to get interesting. But you still have the same problem. You got to rewrite the algorithm from scratch, and you also have to keep the 7 million businesses that are there, that are basically spending the 9, 10, 11 billion a year. You got to keep them on board and engaged, and that's something I can do from a unique perspective.
Tune in
Okay.
on 4:30 p.m. Eastern Time for the debut of Market Overtime with Kevin O'Leary. I spoke with Mr. Wonderful, got his thoughts on markets, crypto, his plan to buy TikTok, and of course Shark Tank, entering into its 16th season. 4:30 p.m. all week, streaming on our YouTube page, also schwabnetwork.com. Don't miss it. And welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for our spotlight on Airship AI. Joining me right now, Paul Allen, president of Airship AI. Thank you so much for being with us. And you have some big targets and agenda here when I look and I see how you're targeting triple-digit revenue growth and positive cash flow for 2024. Tell us a little bit about the company and some of this agenda.
Yeah, thanks, Nicole. It's great to be here. So yeah, look, at the end of the day, we're a video data management platform. So we take data and video in, typically in the form of video and audio, from a wide number of sensors, and we aggregate that and really become the repository for that to help get that data to where it needs to be. So if we take a look at the city, for example, hundreds of thousands of cameras across the city, whether they're on street corners, the bridges, the tunnels, etc. All that data's got to come from all those cameras and sensors back to somewhere. It's got to be managed. It's got to be looked at. And it needs to get back out to the individuals who need to be able to actually see that so that they can act on it accordingly. So really that's what we're trying to do, is be that data management platform to securely move all of that data around. And then when we look at what's exciting in the industry is how we apply AI against that. So how do we take artificial intelligence and apply that at the edge so that instead of just bringing all of these camera feeds back and having giant rooms full of TVs with hundreds of people trying to watch them, trying to spot things that are going on, we can use artificial intelligence basically to enable those individuals to see things more quickly, more efficiently, and really just have artificial intelligence be that second and third set of human eyeballs on a target. So when we look at all of those capabilities and we look at all of the challenges that exist out in the marketplace today, we think we're in a great spot. We've got great customers, we've got great technology, so we think that the future is certainly the limit for us.
Yeah, and this surveillance platform of yours is valued highly, so highly, in fact, you have a sole contract with the Department of Justice for Outpost AI Edge.
Gotta go. Can't stick around no more.
$1 million contract with the DOJ. Tell us a little bit about this. What is it that you'll be providing them?
Absolutely. So, with the Department of Justice and similar with the Department of Homeland Security and others, we're really looking at how do we help enable investigators and individuals within those agencies to go solve crimes. So in this case with DOJ, we're obviously helping support things that are on the criminal justice side of the house. So how do we use our Edge appliance to identify objects or trends or various things that are going on within their operational environments.
I'll let you know what I'm doing when I'm gone, sitting in the chair.
Or whatever it is that they're trying to investigate from a operational perspective. So everything from, let's say, looking for license plates and identifying vehicles and make, model, and color, to maybe an individual carrying a weapon, maybe an individual doing some type of nefarious activity with narcotics. Really, it's leveraging that capability that the AI models that we can train and then apply it to our little Edge appliance, how we put that out there and allow them to be more successful at their job and ultimately more successful at protecting us in the homeland.
I love that. That's with the Department of Justice and the Department of Homeland Security.
Sure got my insurance card.
Separate contracts, and do you see
I'll probably add on to this. We'll see what happens. But I got to figure out a way to get out of this. Right now, I've got
a little over $11 million in our backlog, and a lot of that was reflective of several contracts that we got with the Homeland Security
back in the tail end of last year.
About 2,500 in it.
The current quarter.
So I can do another
A lot
grand.
of that was reflected in the earnings that we released today, which were obviously
That
very
could bring it
excited
down
about.
quite a bit, but
But all of those contracts are also.
we'll see. I'm not too far out of the money, so I feel
where we put a handful of sensors out there.
very
We've shown them
sick.
unique scenarios about how we can help solve problems, both with our software and our Edge AI appliances. And so now that they've been out and using those operationally,
I don't feel like this
they're
all the
seeing some of
time,
the
so it's
benefits
an
and
unusual
efficiency that they
feeling.
provide.
I'm not
All of those things
out of
are
the
what we
woods
can
yet,
help,
but
really drive as the catalyst for the over 120 million.
I need
that's in the
83.
pipeline today. And really, that's a number that we expect to continue.
We'll catch you
to
later.
grow as we continue to expand our footprint for the various agencies, both here in the U.S. As well as some of our global, allied
not, I'll
partners,
stop out
that
sometime.
solve or have some of the same challenges, but need the same problem solved for.
Yeah, big pipeline, Fortune 500 customers, the U.S. federal government. When you look at it, it's impressive, and you have obviously the big growth projections. Tell me a little bit about later today. I know you'll be ringing the closing bell. Excited for that, I'm sure. The team too, right?
Yeah, absolutely. We're a small company. We're based here in the U.S. Headquartered out in Seattle, Washington. We've got a smaller office in Charlotte, and then we've got an AI development team that's over in Taipei. So really, closing bell is just reflective of all of the hard work that's gone in to this product and this company, and getting us to the place that we're at right now. And it's a reflection of the founders who had the vision, to start the company back in 2006. Everything's been done bootstrapped and organically funded. So we're very proud of the fact that we've been able to achieve, a lot of what we've been able to do without any outside investment. And that's allowed us to be flexible and mobile and, adapt to the market and adapt to new technologies and move very quickly.
What do you need to do to continue to grow? I mean, you're certainly getting the influx of business and demand from these the federal agencies and the Fortune 500 companies. Tell me more about the companies that, I guess, when they renew contracts, you must have a great success rate with the renewal, but getting new companies to find your value and why, this would work for them as well.
No, absolutely. So if we look at the government space, yeah, obviously a lot of it is just the continuation of existing contracts, but it's also growth and expansion within those agencies. So where we may have done some pilot opportunities to kind of get our foot in the door, we're really only just targeting some very small areas or some very small specific trouble problem sets within that agency. So once we get our foot in the door, we get authorized to work on that network, we're accredited to be on that government network. That provides significant additional opportunity to expand within that agency. If we look at where we think we can continue to grow significantly as well, is in that commercial space and really the organized retail crime play. So where we see a lot of the major Fortune 500 companies, the retail companies that are partnering with state and local law enforcement or federal agencies to try to break up a lot of these organized retail crime rings, we think that there's a great opportunity there to provide this same underlying platform that can solve a lot of the same problems in the commercial and retail space is what our federal partners do. And if the retail companies see that the federal partners are using our platform, then it's just an easy step for them to say, hey, if this is best of breed and this is what this agency or agencies are using, then why wouldn't we be using that? And it's only going to make their ability to support us and our mission set of whatever we do as a retail agency more effective.
All right, Paul Allen, great to speak with you, President of Airship AI, and enjoy the closing bell. Later, we'll look for you. Thank you, Paul.
Thank you, Nicole.
Coming up next, the disruptors will be focusing on First Solar. Now, First Solar got a bullish call from Barclays, so we'll take a look at that. Keep it right here. First Solar's up about 1.8% right now. We'll be right back.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange. A look at developing stories this morning. I'd like to bring in Caroline Woods, senior market correspondent here on Schwab Network, taking a look at Google's I.O. event. Lots of headlines. What stood out to you?
Hey there. Well, first of all, we're seeing a nice pop in Google shares. Alphabet shares are up about 0.6%, so now up about 1.6% this week, 23% year to date. But yes, the Google I.O. Developer Conference was yesterday. A lot of cool, new, exciting AI features debuted. Of course, Google has been investing in AI for over a decade, but even so, CEO Sundar Pichai says the company is still in the very early days of the AI platform shift. But Google announced updates to its Gemini models. Many of the features are still only available in testing phase or limited to developers, but some cool new things on the horizon, including with Gemini 1.5 Pro. Soon you'll be able to upload 1,500 pages, and it will actually summarize those for you. Or if you missed a long email thread, say you were on vacation, it will actually summarize all of those emails for you, including the attachments. So just ways to make your life easier. There's more AI-powered Google searches coming this week. Those are going to launch in the US this week and other countries following. I will say I've been seeing those AI-powered Google searches for quite some time, so I guess I'm in the test market there. But also in the works, the AI assistant, Project Astra, which is a voice-enabled personal assistant. I don't know if you saw the demo, but it actually, with the phone, the user was able to find misplaced glasses with the help of this AI assistant. So if you always wanted a personal assistant, this will be your chance. But we know competition is heating up. OpenAI's ChatGPT is really kind of threatening Google's dominance in the search field. So, I think this was kind of a key moment for Google to prove that AI is at its core. And we did see quite a few analysts walking away from the conference pretty bullish. In terms of some of the commentary I saw, Bank of America reiterated Alphabet as a buy, saying we continue to see Google as a net AI beneficiary. Believe growing Gen AI integration should likely help drive higher usage and incremental spend across search, cloud, and workspace. Citi reiterated it as a buy with a $190 price target, saying with search revenue growth accelerating in Q1 and margins expanding, Google is well positioned to be a leader in Gen AI. Meanwhile, Goldman Sachs also has a buy rating, $195 price target. They walked away increasingly constructive on Alphabet's long-term strategic positioning, saying they're the leading collection of AI machine learning-driven businesses in our coverage universe. So, a lot of bullishness from analysts. 80% of analysts have a buy rating on Alphabet at this point, but this is kind of Google at its prove me moment as OpenAI and ChatGPT have been hot on its tails.
All right. Thank you for all of that. A good summation of that event. Thank you. And obviously some nice numbers for Google. Thank you, Caroline Woods. Let's look at our disruptor today. First Solar in focus. Some nice positive comments from the analysts on this name as well. Year to date, up about 11%. Been on somewhat of an uptrend. George, some of your thoughts?
Well, I think if you look at First Solar, Nicole, first from a technical standpoint, you're right. Year to date, stock has been moving higher, particularly in the past, a few months or so. It's starting to pick up some price traction. But in the last year, the stock is actually down about 13% or so. And I think it really comes off the back of what happening going back a couple of years ago with the Inflation Reduction Act and all the benefits included in that bill that actually went to the solar industry. In particular, some of the solar panel and technology producers like First Solar, which is a focal point in terms of sales more on the industrial and commercial side of the solar supply market versus the residential side. And so First Solar supplies mostly to industrial, utility, solar farms and such, which is actually pretty substantive in terms of supportive versus some of the residential solar companies, which have actually faced some challenges. One, obviously, from a residential standpoint, Existing home sales have been down, and of course, housing is still in a shortage, and interest rates have actually hurt the residential solar market. So with that said, I think if you look at the calls today in terms of the analysts, they've upgraded their stock slightly based upon some pretty positive elements to the earnings going forward for First Solar. And one of the things I did notice, if you look at the stock, obviously it's been trending on a year-to-date basis, but if you look at the earnings per share that the company reported early in the month of May, $2.20 a share, that was about 4 times higher than the 40 cents for the prior year for the same quarter. And sales were actually higher by 40% compared to the same quarter in the previous year. But I do see some pretty impressive earnings profile expectations for this company, because they're expecting to earn about $13.50 this year. But going into 2025, the estimates are close to $22. So that really puts the forward earnings multiple for this name at less than 9 times. So that's about half of where it was historically in its 5-year average. So it's cheap relative to those expected earnings.
Yeah, and it's interesting also, I mean, just the whole group is worth watching. As you mentioned, like when we look at the U.S. tariffs that have been put on all the clean energy related names, whether it's solar, EVs, batteries, and so on. Tell us about your example trade here today, George, please.
Yeah, so we have to think about that policy. If essentially that policy becomes actual law, or the implications of that might actually be very supportive for prices. So with that said, I do think if you look at the stock in the past few months, it's starting to trend higher. The stock price is above its 20-day moving average, and of course above its 50-day moving average, which is trend positive. So we're going to play trend continuation, but we're going to give it some room in terms of time out to July. So I'm going to purchase a bull call spread, purchasing the 190 July call, then selling the 200 July call against that. So altogether, it costs you about $4.75 a share, or $475 a contract. So it basically allows us to participate if the stock goes higher. The risk is that $4.75 outlay, but your max return is 5.25. That's if the stock hits 200 or higher by expiration with 65 days. So it doesn't have to move too far too fast. It basically just needs to, of course, get to that max profit level of 200 by expiration in 65 days.
George Silas, great to see you. Thank you so much every day for our Disruptor. Coming up next, it's time for our 360 round. We'll focus on everything retail sales. So we got the report. Looks like a little bit of a slowing. I mean, it's still relatively high and people are still spending. What can we expect going forward? Our panel is ready. We'll be right back.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time for our 360 round, and we're taking a look at retail sales, which overall just show that people were spending a little more on gasoline. That might have taken money away from some other things that they were spending on big picture. I want to see what our panel has to say about this. Francis Newton-Stacy, Optimal Capital, and Ryan Patterson, Chief Investment Officer at Linscomb Wealth. Thank you both for being with us. So, Francis, I'll start with you. Some of your thoughts on some of the details within this report so we can get a gauge on if the consumers are strong or pulling back.
Well, it's interesting because, the spending on groceries was still robust and the spending on necessities is still robust. And some of the slowing in some of the spending were sort of on the bigger ticket items. And that may, start to show some signs of some slowing. But when it comes to the consumer, retail sales is not the entire services sector. And the entire services sector is the thing that has really been very, very robust and kept this economy humming. So I don't see a massive breakdown in the consumer yet, but we do start to see things softening, and probably, some people in this bifurcated economy are getting hurt and crunched a little bit more. And so some of those people may be falling off slowly.
And we had a prior revision too. I mean, it wasn't huge to 0.6 from 0.7. How are you feeling about the economy and how people are spending, Ryan? I actually just saw that McDonald's, which was one of the companies that actually noted that people were very cost conscious and is now putting out, I saw a headline crossing while we were here, about a $5 meal just for those that may be, trying to pinch the purse. Within the report, Francis, Newton, Stacy, just wanted to take a look. I mean, I saw autos were pulling back a little bit, but still people are facing higher costs with food. To your point, you mentioned groceries. What else within the report stands out to you, whether it's wages too, and the high rate environment on people's credit cards if they're using buy now, pay later?
No, 1,000%. I mean, the thing is that the consumer has been overstretched for too long. And I think this falling in the big ticket items is sort of an early sort of indicator that things are softening a bit because, they're still putting these groceries and things on credit cards. I mean, the savings is completely dissipated. It's been reported that 60%-ish of the American public is living credit card to credit card. So that's the thing is groceries obviously are not going to fall off. We don't expect that. We expect people to continue eating, but just falling off on some of decelerating in general and then being revised lower. And then the big ticket items are the ones to go first. So it does show a softening. I just don't know that it shows a breaking point yet, even for those overstretched consumers. And you're completely right about the credit card interest rates. Those have become so onerous, to that 60% of the population that is living paycheck to paycheck. And they're increasingly putting necessities like groceries on credit cards. And so everything about this economy is treating the upper 40% with assets differently than the lower 60%.
Yeah, and Ryan, I wanted to hear some of your thoughts also. I think about the labor market, which is cooling a little bit, but you still have the lower income spending growth remaining above that of the higher income spenders and households.
Yeah, so one of the things we look at, we look at many different variables, but when it comes to consumer spending, we do believe that the most important variable to follow is whether or not that consumer has a job. And even though we've seen a little bit of mixed data lately, still overall positive.
Yeah. I mean, when you think about also what the Fed, whether or not the Fed should cut, Ryan, do you think the Fed should cut? Do you think that would help?
We do think based on retail sales today, as well as CPI coming in a little bit softer than expected, that Fed expectations probably haven't changed too much, and that there is probably a high probability of a cut in September. If we look at just how tight they are relative to their neutral rate of about 2.25% to 2.5%, we do think it makes sense to begin easing off a little bit.
Yeah, and Francis, you noted the inverted yield curve. You're still watching that. You're watching liquidity and credit. Some thoughts there?
Yeah, I mean, I don't know that the Fed is ready to cut rates yet. I don't think inflation is fully off the table. Many components of CPI, including food and some of these commodity prices that have just gone gangbusters, have a lagging effect into CPI. So I'm not sure we're completely out of the woods there yet. The Fed, doesn't see any signs of, we have fiscal spending and we have private credit markets sort of buoying liquidity and keeping us from having defaults. And so the Fed, I think, while cutting interest rates would benefit, real estate and commercial real estate and maybe stave off some of that, There is no real catalyst just yet for the Fed to kind of go into cutting mode, because I don't think inflation is done being sticky, or, has some risk intrinsic in these, delayed commodity prices, which have just gone gangbusters. Furthermore, as you said, the inverted yield curve is part of the mechanics of the markets. A lot of these, pieces of these mechanical elements have been elongated by COVID, but I don't think that they're dead. And when the yield curve uninverts, that's when we could potentially see some problems in the credit market, and the Fed should have its dry powder.
Yeah, and look, over 60% of Americans are just living paycheck to paycheck, even half of those that make over $100,000. Those Americans earning over $100,000 a year live paycheck to paycheck, more than half. Thank you both, Francis Newton-Stacy, Ryan Patterson. Thank you. I'm Nicole Petalides. Thanks for being with us here on Trading 360. Download our free Schwab Network app in the Apple App Store, schwabnetwork.com. We have Fast Market next.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennie.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Schwab Network.
Welcome to Fast Market and welcome to the Schwab Network. I'm Kevin Hinks with my co-host for today's show, spending the whole hour with me, Alex Coffey. Today, we got earnings plays. We got 3 good ones. We've got Like Folio, Andy Swan's going to be on the show to talk about Walmart and all the data on the U.S. consumer that they're going to show. We're going to look at At Deere and Company, Caroline Woods is going to cover that one, and we're going to trade Deere and Company. And then finally, George Tillis is going to go over Cisco in the final segment. I also have Nick Theodorakis here, Managing Director of Charles Schwab. He's going to join us to talk about all these things and all these trades. We're going to have a great hour. Before we get into that, let's take a look at the four major indices and see where they sit. At 11 o'clock Chicago time, 12 o'clock Eastern, the S&P 500 up 13/16%, 43 points to 5290. Dow Jones Industrial Average up 0.6, 239 points to 39,797. The NASDAQ 100 up almost 1%, 174 points to 18,494. And the Russell 2000, again, up about 0.9%, 19.25 points to 21,0492. Now, let's bring in my co-host for today's show, Mr. Alex Coffey. Alex, in line is the new beat. The market loves this, and you and I can sit and talk about for the entire hour if we want. But the bottom line for this market today is yields are lower and the dollar's lower, and they're not going to sell stocks in that environment.
Yeah, I think the market reacted in a predictable manner. Is it a sustainable trajectory at the pace that it's been going? I don't know. Is it sustainable to see bad news continue to be good news for the market? I don't know. But for now, that's the environment.
You got to trade the market in front of you, right?
And so much focus has been on inflation with sort of this ramping up of price pressures in the first quarter. This is the first kind of meaningful, I would say, softer print in inflation data, especially after yesterday's kind of mix.
Sure.
But you could definitely paint it as a hotter print.
I thought it was. Jerome Powell didn't.
Retail sales at flat, though, of course, that's not adjusted for inflation. And they also revised lower. The prior reading is showing that either rates are having an impact, price pressures are having an impact, perhaps confidence, as the surveys have suggested, is starting to wane in the consumer, but the consumer isn't as strong as it has been. Now, is it a 1 month blip? Time will tell. But in order to get pricing down in terms of price pressures, you're probably going to have to break something else, and perhaps that'll be what we see happen with some of these economic data prints that are starting to show a little bit worsening on the economy front.
Let's bring in a third voice on that, and so let's bring in Nick Theodorakis, Financial Risk Managing Director at Charles Schwab. Nick, pretty good number.
Hey.
Solid, in line is good. It's all clear. Nick, at what point? I mean, we're hours past the CPI data, so it's hard to really talk about this a lot, but let's talk about the U.S. consumer. We're going to look at him. We're going to get data on him tonight with Walmart's earnings. We got a retail sales number. How worried should we be about the most consistent part of this economy for years, good times and bad times, has been the U.S. consumer? Are we getting worried about the strength of the U.S. consumer?
I feel like it shapes up pretty well for Walmart earnings, guys. I mean, you know, there is absolutely, and you're seeing it in retail sales, depending on which things you include and which things you exclude, the numbers all over the place, meaning there's a real sector kind of bias in what people are buying. You look at credit card data, and, you know, we're approaching all-time highs in credit card balances, and there's a really interesting kind of dichotomy in the credit card space. You're seeing, you know, over half of credit card users are paying off their bills every month, you know, because those rates are so high, and the other half are driving credit card balances to all-time highs. So I think you sort of see that disparity in terms of you know, who and how people are buying stuff. Right? People that are able to pay off, and, you know, the consumer that's doing really well, the higher-end consumer, if you will, is you know, is able to sort of pay for that as they go. But it's taking a real toll, and Jerome Powell said this yesterday, right? It's taking a real toll on the lower earners, and that's what they're really concerned about, and I think that is sort of the bedrock of the economy. You know, if we start to see credit card defaults ticking up and people are relying on that, and rates don't come down, that's really tough, and I think you will start to see, you know, the consumer kind of confidence wane, and you'll see those retail sales numbers continue to slip. So I think there is a bit of a crack here in terms of prices being so high and retail still starting to come down a little bit. To your point, that is considered good news right now in the stock market because it does put pressure on interest rates. But it's certainly not a great long-term cocktail for success in the markets, and particularly in the debt markets.
Yeah, Alex, it doesn't feel great when you see retail sales come in like this, but as long as the U.S. consumer is still out there, the market's doing okay. Walmart, you know what? I don't want to get too much into Walmart, but these lower-priced discount retailers, are they going to benefit from this? Is this good for them? Is Walmart going to surprise us?
Well, what I will say is, Kev, I can't know one way or another.
Yeah,
we'll have more details, I think, as the show rolls on. But what I can say is the retail space in general, where the consumer goes, is always the most kind of lopsided, where there's winners and losers every single quarter, and we find that out through earnings. But what Nick's describing is really this K-shaped recovery that we've seen, where sort of the lower half hasn't had the same successes over the last few years as maybe the wealthier half has, as so much of the gains have been tied to things like financial markets. And of course, inflation is going to impact them less if they already have more. Perhaps the fact that markets are at all-time highs benefits more those who are invested in the market, where maybe you don't have that luxury if you're on the lower side of the wage scale. So you look at where Walmart kind of fits. Well, Walmart primarily sells consumer staple products. Mm-hmm. That's a good
essentials.
If a situation where you have a declining consumer, because they're going to still have to buy consumer staples. They also cater to more of the value segment, so let's call it the lower side of spending. So in that sense, their consumer might be the most pressured, but they sell the things that they need the most. So I think if you see weakness out of Walmart, it's a much bigger warning sign than, let's say, weakness out of Nike, for example.
Sure. Or Target, right? Target was remember a couple quarters ago, Target and their discretionary inventory miss that they had. Well, that helped Walmart, if you remember. Walmart and that lower price point, there's so many mixed signals out here. Like, what do we make if Walmart does really well? What does that mean? Does that mean people are trading down? I mean, they didn't trade down to McDonald's, which has got probably the lowest price point in fast food. I mean, you're seeing points. One thing we'll take out of the consumer price index number today, Nick, cars. New vehicles down 0.4, used cars and trucks down 1.4. That leads to the U.S. consumer, right? If they're buying less and they've got to lower those prices, that's just another thing. What I'm saying, I guess, is the data is starting to pile up on the U.S. consumer.
The bigger purchases are down. You're seeing people pick and choose, and it'd be really interesting to hear Lightfolio's kind of take on this more broadly. Just you're seeing those trade-offs, and if you do have investments and you're using that sort of as supplemental income, right? Inflation is not zero, right? It's not like we're in a deflationary environment. It's just the pace has slowed at which prices are going up, but it's still high, right? It's still historically, in a spot where this is increasing faster than wages are, and we've seen wage growth slow as well, right? People aren't jumping jobs as much. There's, the applicant data for open jobs is through the roof. Sectors that were really hot, where you're getting hired immediately, you're seeing hundreds of applicants now, and companies are being, pickier and choosier as well. So I think that's sort of my theme of all this, guys, is people are picking and choosing. Companies are, consumers are, and I again, not a stock recommendation by any means, but I think you're going to see that sort of show in Walmart. People are choosing things that they can save money on, so that they can do the things they want. You said, people aren't trading down to McDonald's, right? So, you're saving money on sort of store brand paper products and drinks and things like that, and so people can still go spend their $20 at Chipotle as opposed to $8 at McDonald's. And those are like those types of choices are being made, and people are being more conscious of that. It's not a bad thing, but how long is it sustainable for? Is there a tipping point sort of in that type of mentality where you just can't sustain it all because prices still aren't going up so quickly? I think that's what's going to be really interesting to see.
Famous line, Alex. I don't know why they call it hamburger helper. Tastes just good without it. I mean, is that what we're looking at here? But Bank of America data earlier in the week said April spending was higher. Didn't show up in this data.
Yeah, and I think it's this, again, you got to look to segments. So something like Starbucks, I think, shows worrisome signs. Now, Starbucks has made some missteps in general, just
all over the place.
Yeah, in terms of their brand's perception. But for many in my demographics, Starbucks and like the morning coffee ritual is a consumer staple. So despite the fact that maybe someone in your demographic may see that as frivolous spending and perhaps even discretionary, for the younger demographic, it is maybe the last thing that they would cut, but you're not seeing that spending remain there. So, to Nick's point about, employers being more choosy, we're starting to see in the surveys, there's more uncertainty and more feelings of uncertainty from consumers and those surveyed about the labor market. Every single cycle, the very last thing to crack and what makes it a recession is the labor market. And so we always spend the entire time saying, hey, this time's different, look at the labor market. Then eventually, all at once, the labor market starts to break, and we go, oh, wow, how do we not see this coming? So I'm not saying that's going to happen, but this is always the last piece, and it's starting to be the one part that has a little bit of uncertainty right now.
Nick, your thoughts on this same subject. Go ahead.
I think that's really well said by Alex, and I would say coupled with that is the housing market, right? The rental market, the housing market, the corporate real estate market. I mean, we're in sort of two parallel, universes that we've never really seen before. The labor market has been incredibly strong, but again, you're seeing tons of applicants for every job now. The labor market is absolutely tighter, even if unemployment hasn't ticked yet in a meaningful way. Up a little, 3.8 to 3.9, right in the last read. Not a meaningful way, but it has ticked up a bit, and the housing market is every bit as tight as it was. And this is sort of the the nuts and bolts of rates being high for longer. Inventories are still low, so I think those two things coupled together just still, I feel like a little broken record on this, but those are the macro sort of factors that are really, really challenging. The other thing that's interesting for the U.S. economy, because so many other countries now are in a slightly better inflationary spot than the U.S. is, you're seeing stock market outperformance in sort of the the emerging market sector too. You're seeing some of the South American indices up much more than the S&P on the year. So I think there's an interesting sort of movement in sort of international stocks as well. So there's things at play here that are much different, I think, as you dig into the weeds than they are kind of on the surface. And it comes down always is, when does that bad news become actually bad news again? And I think you'll start to see that happen if the consumer really does slow, and that's gonna kind of potentially grind this whole thing to a bit of a halt. So certainly not priced into equities here, guys, with all-time highs.
No, I think we've done a good job, and Nick does a good job of laying out some of the uncertainty that that America faces, and some of the reasons to maybe be worried about the fact that we're nearly at all-time highs, that maybe not everything is rosy, but it's important to look at the other side too. Copper is telling us a completely different story. Copper is telling us that the manufacturing cycle has bottomed and things are recovering and China might be on the comeback. Well, that's been a piece that hasn't even been in the equation for years now. That's been a drag on the global economy. If that part of things starts to click, you maybe don't need the U.S. to be the sole economy basically carrying the world on its back. And that doesn't mean that the U.S. market can't go lower and there couldn't be uncertainties here. But it's really hard to imagine the rest of the world doing well and the U.S. struggling. So if the rest of the world is there to catch the U.S., if there is a stumble, I think that would be important.
All right, well, great discussion as always, guys. We're going to take our first break. Coming up next, the first trade of the day, Caroline Woods will join the show to break down Deere & Company ahead of their earnings. It's all about the farmer. Are they making money or aren't they? Stay right here on the Schwab Network Fast Market. We'll be right back.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennie.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Nobody invests money in New York right now because it's not a stable policy environment. So we're not doing anything in New York. We pulled out of there, although they have a good good energy costs off Niagara Falls, but unfortunately nobody would touch it. They should hire new management in New York. They've got some real problems in terms of how they manage their economy, and I think a lot of people are starting to figure that out. I love the people of New York, and I certainly love New York City, but I wouldn't invest a dime there.
Tune in all week at 4:30 p.m. Eastern for Market Overtime with Kevin O'Leary. Nicole Petalini sits down with Mr. Wonderful to get his thoughts on markets, crypto, his plan to buy TikTok, and Shark Tank entering its 16th season. That's at 4:30 p.m. Eastern all week and streaming on our YouTube page and schwabnetwork.com. Now, let's get back to Fast Market. And now I want to bring in live from the New York Stock Exchange, Miss Caroline Woods, to talk about Deere & Company. Caroline, when you look at a company like this, you know, it's really about the farmer, isn't it? We'd like to say it's a business thing, but if the farmer has more money in their pocket, they're going to buy equipment. Caroline, your thoughts?
Yes, no, I think that's exactly right. We know it's a higher rate environment and there are tighter budgets. So Deere had already kind of warned that there's going to be some normalization in terms of buying that heavy farm machinery equipment, if you will. But yes, Deere reports tomorrow before the bell. Deere's actually had a pretty nice run so far in May. Shares are up about 6% in May, only up about 3% year to date. So underperforming the broader industrial space, but a nice pop this month heading into this report. But back in February, Deere did offer a downbeat outlook for the full year. So that really kind of dampened shares, and they've bounced back since then. But I think that outlook is going to be very key. The weakened outlook was due in part to industry volume weakness, specifically in Europe, but also this anticipation of customers holding off on replenishing their fleets. In terms of the numbers that we're expecting, adjusted EPS of $7.86 for the second quarter. Last quarter it was $9.65, so a drop off there. Revenue, meanwhile, is expected to fall to $13.26 billion. Last year it was at $16 billion, so about an 18% decline. It will represent sequential growth from last quarter, though. If you take a look, that came in at $10.49 billion. So sequential growth, but year-over-year decline. And then, as I said, any updates to that full-year outlook? Just a reminder, Deere said it expects for fiscal 2024 net income $7.50 to $7.5 to $7.75 billion, down from $10.17 billion in fiscal 2023. Said production and precision ag sales are expected to fall about 20%. Small ag and turf sales are projected to be down 10 to 15%, and construction and forestry sales are expected to decline between 5 and 10%. So red arrows across the board there, but let's see if they update that outlook at all. Deere shares up about 0.8% today, heading into this report tomorrow.
Caroline, as you said, Deere kind of reset expectations last quarter, lowering that bar. I see most analysts on the street are kind of split between buy and hold. Do you think that's because Deere's sort of tempered near-term expectations?
I think so. I mean, it's a cyclical stock. As I said, it's higher. You know, we talk a lot about the Fed eventually cutting rates, but we're still in a high rate environment, which isn't necessarily good when it comes to financing farm equipment. One would assume. I haven't actually bought any farm equipment. And then we know budgets have gotten tight. And then Deere said when it reported last quarter, it said they expect fleet replenishment to moderate as agricultural fundamentals normalize from record levels in 2022 and 2023. So yes, as you said, we do see analysts split between buy and holds on this one. That being said, I do think it's important to note Deere's trading at $415.97 right now. The median price target for Deere is $405 heading into this report. So that would imply some downside. So either analysts think that this is the most it can run, or maybe we'll see some changes when Deere actually reports.
Caroline Woods, come on, you would look great in John Deere green, Caroline. It goes with so many things.
I'll wear the green, but I don't have any room for a tractor, if you can believe it, in the city. Nor do I have a yard.
Soon. Caroline Woods, thanks for coming on, as always, spending some time with us. Have a great day, Caroline. All right, now let's bring back in Nick Theodorakis. He's got a trade on Deere and Company. And Nick, if you're investing in Deere, if you're looking at something like John Deere, farming prices, which means, money in farmers' pockets, and the age of these machines, both in terms of metal, in terms of technology, that's always changing as well. And I'll make another case. Nick, if I'm thinking about full self-driving, this is where full self-driving should start, on farms. Nick, your thoughts?
Yeah, those are a lot of topics to unpack there, Kat.
Sorry.
I'm sad to hear Caroline does not have a John Deere that she's driving down Michigan Avenue here. No good. I think the self-driving piece and the technology piece is sort of a sneaky component here, right? The question is, do people have the money to pay for it? So I think this is almost like a test ground for self-driving and automation in the automobile industry. I don't think it's really treated that way, but it's very easy comparatively to sort of automate your plot of land to be tilled and farmed the same way with a some sort of piece of heavy machinery, right? It's a known grid versus sort of going out and driving down the streets of Chicago or San Francisco where they're testing these cars. So it's a good use case for that type of technology, and Deere is heavily in there, and they invest heavily there, and I think that'll be an interesting piece to hear about. Every time we talk Deere, we're looking at the earnings, I go and look at all the commodity charts. Right? What's corn doing? What are soybeans doing? And they've come back off of lows, but they're kind of middle of the road. We're not seeing, I don't think you're seeing sort of, farmers saying, hey, the money is just pouring in, right? I think there's sort of a stable grain market, so I don't think there's probably a ton of excess out there, but the machinery does have to be replaced. This sort of flip side. The flip side is the better the technology gets, the more preventative controls that are in place in this equipment, the longer they can last and the more that they can, make off the servicing of those. So it's a complex business. It's not as straightforward as it seems, but I think that the technology component of it is always, to me, maybe the most interesting. I also agree that they gave this guidance, prior, and I picked up on exactly what Caroline was saying, and I saw the same where we talked about one last week where the price target, the analysts, are fairly mixed on it, mixed to bullish, but the price target's below where it's trading. So I think that's sort of just indicative of the growth story here, and I think that's maybe what we see. You'll see that come through in my trade here. I think that there's there's a little bit of potential for stability here in this stock, relative to just taking a massive directional play. It feels like hold on one second, Nick. I want to set up for an underperformance of the vol.
I want to get Alex's thoughts on this. Alex, soybeans have gone from $15 to about $12. Beans are growing through the cracks in my driveway, Alex. That's why Deere is under pressure.
Yeah, well, what I was going to say, too, is the fact that they're only going off of what they have, the information they have. But if things turn around and all of a sudden these agricultural products are selling for a lot more and they're flying off the shelves, that upgrade cycle speeds up a little bit. So you can see there's a correlation between Deere and these prices. But I'm just interested to hear, how Nick's going to look at this going into earnings, because we can talk about all we want, but we're going to find out and the stock's going to react.
And the last variable, Nick, that we haven't talked about when you look at grain prices and how they affect a company like Deere and Company, weather, Nick. A little drought goes a long way to raise prices and put a little more money in the farmers' pockets. Nick, give us your trade going into this earnings.
Well, I won't digress too much here, but you're already seeing droughts. There's already Canadian wildfire concerns, right? You're seeing California as well. So it's a great point, Kevin. So I guess that's not factored in here into the trade and a surprise in volatility, but we're pricing in about a 6% move using those front week options that have 2 days left. I didn't see a whole lot there that looked intriguing to me, given those vols in the move. So I went out 30 days, looked at an iron condor, kind of a vanilla setup here compared to what we sometimes look at, but even 25 points wide on either side. You've got about 8% from the current price up or down, so you're well outside of the expected price range in the front month options. You're also outside of the expected price range on those back month options. You're about 7% they're implying. This is just outside of that. So relatively conservative when you look at how the volatility is being priced. So about 8% around the current price. Selling the 385, 360 put spread coupled with the 445, 470 call spread. So a 25 point wide call spread and a 25 point wide put spread. Just about $4 that you're taking in on this. Put your break evens down at like 382-ish and 449-ish. So almost up at the annual high of 450. And then giving yourself, again, about 8% to the downside here on earnings with 30 days for this to come in.
Alex, here's what's interesting about Nick's trade. Current IV percentile, 68%. So IV's elevated. He did kind of a big boy, 1 month out iron condor that's got negative Vega of $34. That's chunky. They could take some implied volatility out of this once the earning event comes out, but you still got to deal with the expected move.
So by definition, this is an iron condor, of course, Kevin, but I almost think of this more as a strangle with wings purchased to improve kind of buying power efficiency and protect against kind of that black swan move or multi-standard deviation reaction. It is risk defined. You got $2,100 in risk, but you're collecting a fairly low percentage of that risk. $400 compared to 21. It's a little bit over, 4 to 1. So on the lower side there in terms of that risk reward. But I do like what Nick has looked at here, which is, hey, we're looking at a little bit bigger product up in the 400 camp for the underlying, increasing the width of the spread as opposed to just increasing the number of spreads. Sometimes I think that can be a mistake if you're looking at a $5 wide spread on a $400 stock, that's 1%. A $5 wide spread on a $100 stock is 5%. So this is more in line with sort of the similar of a $5 wide spread on a $100 stock with 25 around 400, but still I would say more like a strangle than an iron condor.
Yeah, Nick threw a big boy iron condor at us. You got me on this one, Nick. This is not an iron condor for the meek, but if it stays range bound and if volatility comes in, this spread has some big Greeks on it. Like I said, a 34 negative Vega has a chance to come down. Nick, I got to let you go, though, because we're winding up the segment. Thank you so much for coming on. As always, like I said, he's a $25 iron condor collecting about $4, but it's a month out, and it's got pretty substantial negative Vega. So we'll take our second break of the show. We'll come back with our cash tag segment. Andy Swan is coming from Lightfolio to talk about, you guessed it, the U.S. consumer and Walmart coming out with earnings tomorrow morning. Stay right here. Fast Market. We'll be right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Kevin Hinks, Alex Coffey, back here for our Cash Tag segment. Now I'd like to bring in the co-founder of Likefolio.com, Mr. Andy Swan, to the show. Sorry about that. Andy, we're looking at Walmart and their earnings coming up here. We're going to get a big look between really yesterday and the end of the week. We're going to get a really good look at the U.S. consumer. What does the Likefolio data say about retail in general and the power or weakness of the U.S. consumer?
Yeah, it's really a kind of a bifurcated story. I think, we've talked about this on here for a few weeks now, and it's really, there's two different economies, and that's the only way I know how to put it. There's the economy of people that have a significant income and cash. They seem to be doing very well in this economy, earning more money than ever, and are just simply less impacted by inflationary pressures, especially since those inflationary pressures are coming in the form of food, fuel, and housing, which are the basics of life. And so the brunt of that pain is being felt by, folks that are just getting started as young adults or have lower incomes and lower savings and are relying on credit a little bit more. And so as we look at Walmart, we kind of think of it in the same vein we might think of McDonald's in a lot of ways. And we saw McDonald's put out a little bit of warning notes out there about the consumer. We think the same is true for Walmart. When we look at Walmart web visits specifically, up 1% year over year. You compare that to Costco, which was a 3% rise, and Target a significant decline. So they're doing fine in that area, which is key because that's a higher margin area for them. But what's really holding Walmart back is the in-store experience and customer experience in the store. When we look at consumer sentiment for Walmart, 62% is pretty low compared to peers. You've got Costco leading the pack, 71%, Amazon and Target both above Walmart. So we see this as a critical area for improvement for Walmart. There's going to be more and more people coming into Walmart stores because they have the grocery offerings that offer a savings. And that's where people are trying to save money primarily right now is on food. And so they're going to be getting more and more people coming into the store, but they've got to create a decent experience. We'll see in their numbers how that translates. We think that the grocery business is going to be good. The online business will be just fine. But we're really worried about that. Like you said, the overall consumer outlook, I think, for the Walmart customer is starting to get pretty dire. There's only so much that these folks can continue to handle inflation at the levels that it's at.
Andy, clearly Costco is doing a lot of things well, but the fact that they have that annual membership, you buy in bulk typically. It does lead to a stickier, more recurring consumer, I would guess. So I want to set them to the side. When we look at this comparison between Walmart and Target, we know Target invested heavily in the last decade and a half or so in their store experience. They're a little bit more discretionary than Walmart. But when we see kind of the comparison in web visits, when we see the happiness, are we watching a situation where the Target consumer maybe can't afford Target as much anymore and they're becoming a Walmart consumer? So while you see Walmart at the bottom on happiness, it's sort of a situation where you've traded down there. Your experience has gotten worse, but there's nowhere else to go.
Yeah, it happens all the time. We're seeing that across different industries where the people, really in the middle are getting squeezed downwards into, experiences, dealing with businesses that they might not otherwise. But, the reality of what's in their wallet and what's remains on their credit card, purchasing power, forces their hand. And so I do think that there's definitely that factor, of people essentially getting priced out of the Target experience, and especially in web visits. I think that's the biggest story of our research into this. Has less to do with Walmart and more to do with Target, because we think they're losing a lot of their high margin business on the web. But yeah, you're right. Walmart's going to see more foot traffic, but with everybody gripping their wallet a little tighter. And we'll have to see how the company suggests its outlook for the rest of the year. But we think that they're going to be pretty cautious.
Andy, what you mentioned about the Walmart in-store experience, we all understand what that means. But here's the thing. Full year 2024, $100 billion in e-commerce revenue at Walmart. So are they slowly but surely putting out that fire that might be the in-store experience and really competing with Amazon? They're not there yet, but they've got both experiences. Maybe that Amazon doesn't. Are the investments they're making in e-commerce kind of helping them in that problem?
Oh yeah, definitely. Walmart was late to the e-commerce game, but when they came, they were, there were some false starts in there, but at this point, they're a very competent competitor to Amazon. The Amazon experience is not exactly getting better for most people. It's getting a little more convoluted, a little more difficult to deal with. The cool thing about Walmart is, you buy from Walmart.com, and if you want to, you could probably get it that same day, either by going to the store, having delivery that same day. Very easy to use. They've got it integrated with this, massive distribution center called all of the stores that they have across the country, which are, I think there's a Walmart store. I'm not sure about the exact data here, but it's something like 90-something% of people live within a very short drive of a Walmart. That's not true of Amazon. So that's a significant advantage that they have. But yeah, I think Walmart has done a really good job there. We'd like to see the growth numbers a little bit better, especially with Target declining so much. We'd like to see some of that moving over to Walmart, but we're just not seeing that yet. We think more and more people are just going into the store.
And we don't hear from Target, I think, till next week. After we get Walmart, you kind of see that stark contrast between the two. How much does seeing the Walmart numbers, good or bad, going to influence how you guys look at Target, you think, going into next week?
Yeah, so we're slightly bearish on Walmart going into this, and if we see the type of outlook that we think we're going to see, which is a little skittish about the U.S. economy and the U.S. consumer from Walmart executives, then I think it's a real green light to go after a lot more aggressive bearish position on Target based on what we're seeing.
Yeah. By the way, here's the stat. 90% of Americans live within 10 miles of a Walmart or of a Walmart store. That's an incredible ability of scale and a store network that they have. Andy Swan, great conversation as always. Great data out of Leckfolio. We appreciate you guys coming on. Have a great day, Andy.
Thank you. You too.
All right. Now, I think if you believe that the data you're seeing is real, and that the U.S. consumer is starting to buckle, the question you have to ask yourself, does that mean they go for their essentials, they downsize in price, which might actually help Walmart, or is this a problem with overall consumer spending? That's what you have to do. Now, if you think that overall the U.S. consumer is weakening, no matter what category they're in, Walmart has had a pretty nice run up to these levels. It hit as high as $61.66, now trading just under $60. The trade I looked at we look at this in paper money a lot of times on this show is, and here's why it's pretty significant today. Selling this week's May 24th 62.64 call vertical for 32 cents, and using that credit to buy the May 24th, May 1757 put calendar. By the way, the 57 put calendar, Alex, trading a dime. A dime. Walmart is a very low premium name because of, look at the float on Walmart. It's massive float. It's hard to move the stock significantly. The expected move, very low, only $2.30. Alex, this is not a big, you take it in a small credit. You don't have a lot of risk. You have the difference between maybe the 22 cents and the width of that strike, which is $2. Yeah, $1.78. Very low risk. You've got a downside play right in line with where the expected move is. Your thoughts on this complex trade?
Combining this with what Andy said, there was nothing in Andy's presentation that made you overly worried about the upside in Walmart.
Right.
Doesn't mean that it won't go higher and it can't go
Absolutely
higher.
could.
But if you're just looking at it through that lens, it's a matter of, does it kind of hold its value or perhaps move lower? And I think you could make the argument that logically you'd see that trade down, but you'd see smaller ticket sizes. So more customers, but smaller tickets. Well, we already maybe have seen the more customers part throughout the last year, and now we're just the part where the tickets just get smaller and smaller. So if they do come out with a more conservative outlook, you do see a little bit of pressure on the stock. It might be muted, but that 57 strike might be right in the crosshair.
The risk in this trade is the width between the call vertical, which in this case is $2. You can widen that if you want to take in a bigger credit. That 62 strike, by the way, would be a new 12-month high. I'm not sure if it's an all-time high, but this is this assumes a bearish posture in Walmart. Now, if nothing happens and it stays right here, you collect your credit and you move on, and everything goes to zero. But if you get that downside move, this is one that you've collected a credit and you've got a downside calendar, frankly, for a very low debit, right? But remember that this is a low premium name with a massive float that doesn't always move. Doesn't mean it can't. It's just a low probability that you're going to get a big move. An expected market maker move of only $2.30. So kind of an interesting look and a way that we put our fast market take on this name. We're always searching for something that looks like edge, hoping that it shows up in this trade. All right, let's take our final break of the show. Come back with a Ben Lichtenstein market update. Then George Tillis will cover our final earnings play of the day, and that is Cisco Systems. See you in a few minutes with more Fast Market.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Fast Market. Kevin Hinks back here for our final segment. Before we bring in George Tillis, let's get to a Ben Lichtenstein market update from the Schwab News Desk. Ben, just all systems go here, Ben. Doesn't look like a lot's getting away. Yields lower, dollar lower. What are you seeing?
Yeah, it looks like the bulls are still in charge here, doesn't it, Kevin? Sharp rally off the lows that we saw last month and new all-time highs here today in 2 of the 4 major indices. I think a pretty good reflection thereof is investors are exhibiting a vote of confidence, right, in the Fed, in some of the data as of recent, and in earnings. Let's just start with the S&Ps to just shy of 5,300 here. I mean, look at this move here. We're up over 0.75%. You can see all 4 of the major indices. Green arrows across the board. The Dow got above 39,800. You saw the NASDAQ. Again, I mentioned a new all-time high above 18,520. And even the Russell's joining in briefly above 2110. Now, we've pulled back a little bit off those extreme highs, but not much here, Kevin. I mean, again, we're seeing rates come off, U.S. dollars come off, multiple contributing factors. This all combined with the fact that investors really already were sort of focused on the positive and kind of discounting the negative. So, yeah, the rally continues here, right? I mean, the strength we've seen off the October last year lows, and one could even argue off the October 2022 lows, is really what we're seeing resumption thereof. A little bit of a slowdown, pull back into taking out the March lows in April, but we shouldn't spend a lot of time down there.
Ben, lower dollar means gold's getting a big boost today, and an up market means they are killing VIX.
Yeah, we were talking about record highs in the indices, S&Ps and NASDAQ. We're not far from that in gold either, right? You've got the all-time high up around 24.48. We're up to 23.92 here today, Kevin. And we've seen with the dollar weaken, with yields coming off, and gold has really been a safe haven, right? I feel like with some of the geopolitical tensions that we've seen in the Middle East, which, still remain and are still a focal point for many, but the VIX also a pretty good reflection of what we're seeing in terms of the indices. It's been coming off significantly. I saw the fear index, as we like to refer to it as. Keep in mind, when it's at 1260, there doesn't seem to be a lot of fear out there, right? But definitely keeping an eye on the weakness in the U.S. dollar, because again, it bolsters some of the other commodities, which sort of feed back into that inflation discussion. I mean, look at copper recently to $5. So there's a multiple focal points here for investors and traders, but I would definitely argue that the new all-time highs in stock index futures products are at the top of the list.
Thanks to Ben Lichtenstein, host of the Future Show on the Schwab Network every day at 8 o'clock Eastern. You should probably check him out. All right, now let's bring in, live from Salt Lake City, Utah, Mr. George Tillis to the show. Going to talk about our final trade of the day. Earnings tomorrow morning, I believe, or after the bell today. After the bell today is the right call. Yes, after the bell today. Cisco Systems, George, low bar here for this company.
Yeah, that's the thing. I mean, if you look at Cisco Systems, I mean, this is obviously one of the global leaders in network equipment and software and cybersecurity. And of course, they've made the acquisition of Splunk, which actually closed back in March, and this is increasing their presence in software and data observability markets. But the stock has really languished in the past year. I mean, it's higher by only about 4%, but I mean, obviously, it's significantly underperformed the broader market using the S&P as a proxy or benchmark, which is up about 26% the last 52 weeks. But as you mentioned, this might be sort of a low bar quarter for Cisco, and in fact, it looks like it is, considering that the earnings and sales profile for the combined businesses, including the Splunk portion now, are expected to resume slightly higher earnings and top-line sales after this quarter. But if you look at the numbers in comparison to last year, they are expecting about 83 cents in adjusted earnings. Now, look at last year, it was about $1. So this is a pretty significant decrease compared to last year by about 17% or so. And sales also expect to be slightly down by about 13% to $12.47 billion compared to over $14.5 billion for the same quarter last year. So, there's a couple of factors I think that have created some softness in their underlying business. One, if you look at Aristanet, I mean, Aristanet is basically eating Cisco's lunch because that stock is hitting new 52-week highs. And I think really there's an element of value in Aristanet versus Cisco in the sense that Cisco, over the multiple years or past half a dozen or so years, has been integrating their software, the software-defined networking alongside hardware, so they bundle it together. Now, that was a good strategy over the years, but one of the things Aristanet has been doing is they actually have their network cybersecurity and software that is unbundled, and that's a value proposition a lot of large, mainstay technology companies like Meta Platforms, Amazon like to have. They like flexibility or having sort of this agnostic feature in software versus their network hardware. So that might be one of the things that's helped Cisco back. And two, I think there's international presence. Cisco sells quite a bit more than Aristanet in the national markets, and that might be another challenging environment considering competition from companies like Huawei, for instance, in China.
Yeah, George, a lot of what I've been reading about Cisco is that the bottlenecks that they had that caused a lot of problems seem to be moving downstream. It's now the customers that are having trouble, and some of the people think that the second half of the year could be a more normalization of their demand and kind of a return. That being said, the stock trades at a pretty low valuation, has a pretty nice dividend, George.
Yes. It does, and that's the thing. So stocks, even though companies are profitable, Cisco is profitable. I mean, if you look at their earnings position, their net income margins over 20%, but it's really about profit growth. So you want to see growth because that's the positive earnings yield that investors participate in. If of course they expect investments to move higher in price. Now, looking at the growth rates for Cisco on a forward basis, it's around 2.5% earnings, 2.5% revenue. So they're expecting slightly positive earnings and revenue growth. But again, it's better than where it was, at least on an earnings front, in the past 4 quarters. So it looks like there's an inflection point happening. It looks like a back half of the year story. And the last thing I will say this is, I'm not saying I could predict anything, but one of the things I noticed is if you look at the cash position that Cisco has, about $28 billion in cash on the balance sheet. So I wouldn't be surprised if they, in this earnings conference call, denote some increasing dividend, but also perhaps a share buyback. So that's something to keep in mind as we move into this report.
Yeah, management / growth projections for the first quarter. They did it once, then they did it again in the second quarter. So if this is a turnaround story in the second half, could be a pretty good story. We're going to watch how it plays out. George Tillis, thanks for coming on. Thanks for spending some time with us. Have a great day, George. All right, so when you look at a stock like Cisco Systems that has sold off, if you look at the 3 months or 6 months, it's down almost 7%. In the 1 month, it's up a little bit. It's come off its lows, but this is a stock that, like George said, spits off a lot of cash, has a dividend that is not guaranteed, but it's 3.2% dividend, trades at a relatively low PE. So maybe this is a company that you want to look at as a covered call candidate. And if you were going to do that, something like that, because it allows you to still capture the dividend if the dividend gets paid. We always have to say that because dividends aren't guaranteed. Each quarter they have to declare it. Now, if you think that this is a bullish play and you want to keep something with the dividend, you could just do what I feel is the original options trade for people, and that is the covered call strategy. And when you look at it, it's buying the underlying. In this case, looking at the expected move for this week at about $2, going up and selling the 51, I believe it's the 51 call this week. The net debit on that trade, we've got 48.70 up there. It's moved up to about $49, the net debit. And so what you do is you buy the underlying, you sell the call. If it moves up there, you sell the stock for above $51 if it moves in that $2 range. If it doesn't, that call that you're selling at, this week's 51 call that is currently trading about 50 cents, goes to zero or a very low price. You can then extend duration and keep chipping away at that net debit that we talk about. When you lower the net debit, you lower the break even. There's a lot of, this is a very popular strategy. It doesn't mean it's right for everyone, but it's a popular strategy of hedging your overall underlying. It can be done in Cisco. It can be done with an overall portfolio. A covered call strategy is something that adds theta. Like this for the next 2 days has $24 in daily decay of options. So that's an idea for something to do with any stock that trades a dividend. All right, that's our show for today, everyone. That's going to do it for here. All of us at Fast Market. Download the Schwab Network app, available in the Apple Store, and tune in 24/7 on schwabnetwork.com. Stick around here on the Schwab Network. Next Gen Investing is coming up next with Alex Coffey and Jenny Horn. Have a great day, everybody.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once a client knew that she was hurt, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, a pretty positive reaction to CPI this morning, as well as even retail sales, which I think signal that maybe we're seeing some easing as far as inflation. I wouldn't say it was exactly a sort of dung as far as the markets are concerned, because there was still a definitely inflationary read from at least CPI. But hey, being received positively, dollars higher today as well.
Yeah, more of a macro day. Hard to really tell under the surface how much of this is just simply excitement around sort of that slowing economy, a little bit slower inflation. Perhaps the term that you're hearing today is the Goldilocks term. Not my favorite term, but not too hot, not too cold, I guess, is the interpretation. All-time highs S&P 500. Anytime you can say that, it's got to be a good day.
Seems like inline data at this point means it's good data because it pretty much wasn't exactly like, again, no signaling that we're seeing inflation cooling substantially as I think that we as consumers would like, but at least showing signs of easing from the past 2 months. But as always on this show, we'll step away from the economic data. We'll focus more on the individual stock moves that are impacting some of the markets today. We'll kick things off with upvote and downvote. We'll chart and trade our upvoted names. For FOMO today, we're looking at Monday.com as shares are ripping after a pretty nice first quarter to their best day, at least pacing to close out their best day in almost 3 years. We will also be really just diving into all things Nextracker, which is another name that's jumping after its fourth quarter results, also pretty handily top expectations. So we have some earnings to get through. We're definitely at the tail end of that earnings cycle, but like I say, it's always earnings season if you're a believer. We still have some big names actually to look forward to.
Some big moves in some of our names that we're looking at as well. I'm seeing, double digits in the case of some of them, pushing double digits in the case of others. No meme stocks today, but they are down substantially, so we'll keep our eyes on that if there's anything to report there. But let's do upvote, downvote, not endorsements, not recommendations. First one on the list is Dell. This is one of those names making a pretty nice move here, up almost 10%.
Okay, this is also one of those names that its chart is actually even more impressive than today's move to the upside. Dell shares are up over 90% on the year. I mean, who would have thought that we'd be talking about Dell to this strength in 2024? And I think that's kind of exciting. And Morgan Stanley only fueling this bullish fire today, naming Dell a top pick, raising its price target on the stock and saying it remains a best idea. They highlighted that their customer and supply chain checks are showing Dell's AI server and storage business is seeing more momentum than they had previously even assumed. Now they've moved their price target to a street high of 152. They were up from 128. This name is though very much loved. There's 17 buys, 2 holds, and 1 underperform. Average price target is $126 a share, $126 a share, yes, which does imply actually downside obviously from where we're trading, but they did have some news that helped propel this rally today. I'm assuming this is not just on the back of this Morgan Stanley note, but they did say that they declared they're expanding their server portfolio with performance and efficiency upgrades to their Dell Power Edge. So that was about some positive price momentum yesterday that's carried on into today.
One of those kind of second-tier AI hardware plays, it seems. At least that's what the chart tells me. Yeah, it's very impressive. Look at that uptrend. Over 100 billion market cap now for Dell as well, which is something I didn't know that we'd be saying in 2024. Next one is DraftKings. We're kind of in the lull of the sports calendar when it comes to gambling and games, but that also means that football is just around the corner.
Well, we're in the NBA playoffs.
Yeah, if you're looking at sports betting handles, though, I don't know that the NBA playoffs pushes it the same way that March Madness, the NFL, or some of those other sports do, but I'll give you that.
No,
it's almost over, though.
I mean, you're right. Like, from viewership standpoint, yes, there's just not as many eyeballs
I'm just saying betting dollars.
Yeah, I mean, I would agree. The biggest events of this, betting events of the year, yes, are behind us. And actually, I'm dying for it to be NFL season once again, but can't get too far ahead because that's in the fall. We've got to appreciate the now. But as far as DraftKings is concerned, UBS did raise their price target to $60 a share from $56. Kept a buy rating. They said that overall, the better than expected first quarter earnings showed continued improvement in the structural hold and unit economics across DraftKings' existing business. They said that given DraftKings' improvement in customer engagement and retention, they increased their estimates following actually their earnings report. So this earnings report only proved the more bullish case as far as UBS is concerned. This name is also fairly loved. There's 28 buys, 7 holds, 1 underperform, no outright sells. But on this name, the price target's a bit more impressive, $51 a share. That implies about 13% upside. 31 would be wrong math, but 13% upside. So the overall street consensus is that this name still has room to run.
One of the SPAC success stories, huge run up post its public offering, up to $74, but it was a pretty tumultuous 2022 and thereafter. Traded all the way below $10 a share once again. But really impressive comebacks that now trades over 45 and certainly some upside seen at UBS. Next one on the list is Palo Alto Networks. Now these cybersecurity names haven't been the greatest of performers, I would say the last quarter or so, but there's still so many what feels like fundamental tailwinds for them as we read more and more about security breaches and things of that nature. Well, all these companies you think have that as a tailwind down the line. It's just a matter of timing and when and where they go to.
Yeah, and this name, so Palo Alto Networks has been somewhat of the crown jewel of the cybersecurity space just based on its performance, but then after its previous earnings report, shares tanked. And we can see even from the chart, we've been not able to recover really those losses. We're trying to claw back. It's been a slow grind to the upside, but that's really what sent shares on somewhat of a new trajectory. Still, I think that there's lots of room for growth for this entire space, like Alex, you said, but the street is fairly mixed. Morgan Stanley today did rate them as overweight with a $360 price target. They're bullish ahead of next week's earnings. They do release on Monday after the closing bell. They see this favorable lineup into the third quarter print given the conservative estimates, again, following their last quarter. But they did also mention that checks have indicated some pretty sizable deal momentum into this report. Now, on the other hand, though, we saw JMP Securities actually keep their outperform rating 380 price target, so even more optimistic. And then for balance, Rosenblatt today I saw did raise their price target, but to $300 a share from $256. That is the only price target currently of the three. That obviously implies no downsides. We're trading just below around $310 a share.
Yeah, a little bit of downside in that one. It'd be, let's call it 3%. So when you look at this particular stock, not as much activity as you'd think you'd see in a cybersecurity name, only a little over 1 million shares trading today, but we do have that earnings on the horizon. Last time, obviously, that led to a ton of volatility. Options reflect that this time around. It's a 97 IV percentile. That may only climb into earnings, so maybe one that we revisit as we get a little bit closer to that date. But certainly a name that has some work to do to get back to those all-time highs. Last one on the list is Walmart. We talked a little bit about this on Fast Market. Kevin and I with Andy Swan. I think there's a lot. This is the one this week on an earnings front that has full market moving potential, I'd say.
Yeah, this is the one. I feel like we've never talked about Walmart more, frankly, because it's like the biggest of the back half of this week as far as earnings are concerned. And I think there's good reason for that, because Walmart, I know a lot of times it's discussed as like it has this great read into this lower end consumer, but I completely refute that. I actually think it has a great read into every type of consumer, because this is the largest U.S. grocer. So if you want to see how inflation is impacting consumers and you want to see these various trends of like food costs, the trade down effect, I think that they're a great demonstration for how that is faring right now. And overall, we're expecting revenue 5% jump year over year. Adjusted earnings are also expected to rise just over 7%, so we're growing. Total U.S. same-store sales, though, which does include Sam's Club, of course, those are expected to jump around 3.4%, with, again, its namesake stores expected to rise around 3.5%, boosted by some of this traffic and ticket size improvement. Now, this does come after the company announced plans to cut around hundreds of jobs and ask employees to relocate to its headquarters in Arkansas. That was reported on Tuesday of this week. They, again, the largest, not only U.S. grocer, but the largest U.S. employer. So they employ around 1.6 million U.S. workers. They did also conduct a stock split for the 12th time in 50 years during the quarter. So there's a lot to actually look forward to. And we get these results then ahead of Target, which reports, I believe it's next Wednesday, actually, before the market opens.
Yeah, I'm still getting used to the new stock price post-split, but I'm glad you brought up Target. That was one of the big things that Andy had to say from Likefolio, which was really we don't know what Walmart's going to say. They were moderately negative on Walmart, but if Walmart's struggling, they said that they would be a lot more aggressive in negativity surrounding Target, as Target on their data was performing a lot worse than Walmart. So I tend to agree with you, Jenny, though, that if Walmart's struggling or doing well, particularly if they're struggling, it's going to be really hard for me to envision other brands doing well in the retail space. It's sort of your biggest, widest scale, lowest price products aren't flying off the shelves.
Totally, because I think with Walmart's like diverse price points, there's an accessibility where it's like any income consumer could be drawn to Walmart, just given it's huge, it's everywhere, and yeah, it has like everything you could possibly need. Target then I think eliminates a lot of those that are more inflation constrained right now, just because it's expensive. I mean, I avoid Target because I know myself and I cannot control myself in a Target. So I think Walmart has that accessibility, but we'll be watching those numbers, of course, when they report, and we'll be going through some example trades and key technicals in that name, as well as DraftKings coming up next.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time for our Chart Masters segment. So today we are looking at DraftKings as well as Walmart. Two very different charts. Can't find a theme there, but here to hopefully make sense of it all for us is Ben Lichtenstein, our Chart Master today, the host of Futures. Okay, we'll start off with DraftKings. We've got a fun one. Alex is saying it's a weak time to bet right now.
417-818-2456.
I have to get back to my NBA because they're in the playoffs. So what are you looking at as far as this chart goes?
It is a fun one, Jenny. And
Okay, I'm back.
I wanted to start with a more granular time frame, work our way up into a little bit more of a longer term, and you'll see how the market's fractured, right? And
This
that's what I
market
look
is
for.
crazy now.
There's 2 phases of development. I look for them to establish a bit of a trend, and in this instance, let's just begin first and foremost with looking at the hourly candles. We're going back to the beginning of the year. The stock was trading around 32, 33. You can see into the beginning of the year, February into March, we saw some conviction all the way up from, again, 32, 33, all the way up to just shy of 50. Since, though, we've been a bit sideways, right? Not a lot of follow-through, not a lot of continuation of the pattern that we saw in the first 2-3 months of the year. And in fact, more so than not, recently we've been kind of sideways and really just rotational, as I like to think of it, around this $45 level. So high conviction on the left side of your screen, balance or value forming after that run-up, acceptance of the new upper level throughout most of this period. Again, we're talking about throughout March, April, and now half of May. So let's take this and kind of take a step back. I want to show you what's going on as we add a little time on to this.
It's a crazy day.
Chart here. Now you can see.
I mean, this is bullish as I've ever seen anything.
Higher and higher levels here as you take a look.
I mean, I'm totally convinced that I was almost wrong about this market. I have to be. I mean, today is just unbelievable to have a day like today. So I'm sitting here at the doctor's office. I said, man, she said, what's wrong? I said, I'm down. I got to figure out how to get out of this thing. And when we had that dip, not that one, I recognized the head and shoulders, so I got out of that thing real fast, and I was down about 400. I added on. And then I got in calls, and we're still going up. I mean, this is, I don't know where to go. You have to use the Fibonacci extensions. There's got to be a bottom to this sometime. From 500 all the way up to 530 in 2 weeks, 2.5 weeks. What's your level? 530.10? God. Let's do this. Let's see. I'm going to do a Fibonacci on this with the extensions. At 526, 530.91. What do you got, Mike? Can't see because of that stupid. That's it. I can't frickin'. Ah. 530.91. What turned out to be a, oh shit. Freaking eyeglasses are getting high anymore. It should be, here we got a gravestone. I'm gonna be looking at puts. I still want to trade in puts, man. It's so damn freaking stupid. They're definitely making a statement today. We've got a dragonfly doji here at the bottom. So I wasn't going to take the put until we dipped below the 63. And look at them come back up. I mean, they're just pumping this thing up. I'm watching the tape. AMC popping. Well, why ain't you answering the phone? Yeah, this gym was always clean. I paid for my glasses with my personal account, and I need to figure out how I pay for it with my business. I just write myself a check, or what? You can give me a call, please. 417-818-2456. Bye-bye. I'm sick of it. We're at a double top now. I mean, 1, 2, 3. We had this. I thought we were really going to get it, but we did. But we turned around with a Dragonfly Doji. And I could have really made a killing today if I'd done that right first. I can't believe I paid for my glasses with my personal account. Now what's this? Seven, 8. 862323. Still wants to go. go higher. I mean, I loaded up. I put a lot more money into the SPY puts than I wanted to, but I took a big risk at the bottom. That was incredible. I mean, I don't think I've ever been so tense trading before like this. And it should be simple. Eyes, I'm typing in eyes. SLNA shares trading higher around for the shocks moving middle of midday, 12 discretionary. Recorder thing.
And like, it's the difference between, you know, valuing him and his ideas versus then like, you know, valuing your position if you have it in Tesla. So walk us through this whole story regarding his pay package, because while I don't think that this changes anything with Tesla, it is, I mean, it's considerably expensive, and it's been something that's now been headline story for several straight, it feels like weeks now.
Well, when you talked about where market cap is right now, over 500 billion.
So Americans don't like
far away from where it once was back in 2018 when
Americans don't like China building a $12,000 EV car. I mean, the Democrats don't like it because they're money grabbers. They want things cheap. Guy gets on there this morning and says he sees Teslas everywhere. He says it's going to run our auto industry out. I'll see if that's true about that China $12,000 car, because I thought that's kind of funny. Yep. The tiny low-price electric car called the Seagull has the American automakers and politicians trembling. You know, screw these people in the White House. They don't get it about what Elon's trying to do. He wants to get everybody in a car real cheap. He's got the money. I'd go out and buy one of these right now. The shorter range versions cost under 10 grand. There's some guys coming in here buying this at $10.50 right now. SLNA. No, I'm not in puts. No. This is what we're going to do on puts. Let me get this trend line on here. Let me get it up on bigger. You know, I don't know if I should make any business decisions right now. But I was able to make it back plus, so I'm okay with it. But jeez. Come on, Jimmy. Yeah, perfect. So if we dip below this line right here, I'll get puts. Get them and run them to the, how much is that? That's only $1. Now, they're making a statement today. They don't care what Powell says. Fed Kashkari, his view that Bitcoin has a little practical use, not an investment vehicle or currency. The Fed has commented on achieving a 2% inflation goal. Where? With higher U.S. government debt, it might take higher borrowing costs in the near term to achieve that 2%. Who's got to borrow it? Kashkar's balance sheet runoff is going well. All they care is about their own money. And we're paying for Kashkar's Fed focused on demand, the economy to get inflation down. Americans have been spending more than I would have expected. I don't believe a word they say. I really don't. Puts are real cheap. I had the 525s and they're down to the 527s. AMC just hit the VWAP. What's going on with Disney today? Bob Iger spoke at the media investment. Okay, Walt Disney CEO shares are trading lower. Disney Bob Iger, which is a dick lick, spoke at a medium investment conference Wednesday hosted by Moffett Nettleson. What to know? According to the Bloomberg report, Iger announced plans to cut marketing expenses for Disney Plus. That ain't good. After years of investment driving subscriber growth, Disney will now cut costs in the effort to realize profits of the streaming business. Profit margins direct to the customer streaming business. The report indicates that the media giant plans to take a page out of Netflix's playbook in investing technology. Touch the company's Rick Sports by, and the company peaks business years. This year's also experienced some weakness Wednesday after the Comcast Corporation CEO Brian Roberts announced a new streaming bundle. Ha! Disney just don't have a chance. So let me look at the chart. They pumped the stock. I think we have to wait until the CEOs start pumping it again, like they did before. We can get under $100. 98, under 100. Or close to it. Yeah, right at 100. Now that'd be, yeah. What happened to it? Oh, because it was, I got it. Let me see here. Let me put a line right here on the, let's go to the 20 hour, 20 day, 1 hour. One hour, 90 day. There it is right there. Well, it has to be up to the wick. Yeah, just under $100. Real close to 100. I bet you it stays above 100. Disney does. Man, I tell you what, I wish I'd have had better sense this morning. But I was stubborn. Look at that. New high. I wasn't going to buy the put yet. Not in this market. They're trying to send a message, a big message. We broke that double top, or the triple top. Oh, there's the X. Why not take it to 535? Fudge Spy may as well go to 1,000. I'm not gonna get angry or nothing, but I'm gonna turn on CNBC. I want to see their faces and their excitement. We told you so. We told you we were bullish, Jimmy. You didn't believe us. We have an expansion pattern for the first time. We don't believe it, Jimmy. So if it pulls back, it's going to be little by little. YouTubers, did you miss me? Jim, he just halted, yep. Fudge. Mister's up $400 from May 1st. That's disgusting. Let's see how much I can take of this.
Good afternoon, everybody, and welcome to Power Lunch alongside Kelly Evans.
Oh, it's going to be easy. Got Kelly on there.
Coming up, the cooler data the market was waiting for. CPI, otherwise known as inflation, dropping slightly. Core inflation at its lowest reading since 2021.
Plus, the White House's EV tariffs were meant to protect the U.S. auto industry.
I cannot find that. Okay,
First
calm
on
down.
the markets in the aforementioned EV space, NEO shares are up on an upgrade from JP Morgan.
NEO was just sold off.
Prices. This one is getting lots of attention lately, not just rallying this
It
week,
ain't
hitting a
up.
record high, and we're seeing massive volume and we'll have a little bit more later on.
The meme stocks pulling back today. AM
He said NEO's up. Really?
23 million new shares. That'll do it to you.
Certainly will, and the Magnificent 7 ETF briefly hitting its highest level since inception in April 2023, currently up a little less than 1%.
And on the overall market front, the Dow is up nearly 300 points. It is within
NEO's
about
up.
160 points of 40,000 for the first time. S&P up 1%. NASDAQ up nearly 200 points. We may have some all-time record high closes today.
Looks like it.
Now, those moves are being fueled by that cooler than expected inflation report out this morning. And here to dive deeper is James Demert, Chief Investment Officer with Main Street Research, and Kathy Bosjancic, Senior Vice President and Chief Economist at Nationwide Mutual. James, let me begin with you. You see the economy as kind of right where the Fed you think would like it, even though they keep saying inflation is too high for their taste. But so you don't think the Fed will cut rates at all this year, and you think we are in the incipient stages of a nice bull run.
Yeah, Tyler, thank you. Good afternoon to you and Kelly. Yeah, I think the Fed does. They've got it right where they want it. I know the market would love them to lower rates, but think about it. GDP north of 4%. You've got employment very strong, and wow, corporate profits coming in way better than expected. These are the hallmarks of a new business cycle, one that's really productivity-based with the AI tailwinds. And you can have these kind of environments. The last time we had it was 20 years ago. Tyler, you and I might remember that from the 90s when you had the tech-led market. And you can have rates stick up high for a while without the Fed doing much.
So too much attention on rates, maybe not enough attention on earnings, number one, and productivity growth, number two. Kathy, how does that strike you?
Well, hi, Tyler. Happy to be with you and Kelly as well. Well, I think one thing I would disagree with is I do think the Fed is poised to raise rates, lower rates this year. And I think the data this morning keeps December and also September alive, really. And I think that that said, I do think the economy has been quite resilient. But everything's on the margin, right? So we're seeing some slowing in employment growth, moderation, maybe that's a better word. And then you saw that filter through to income, and then now we saw that with retail sales. So you're seeing this kind of nice moderation, which is what the Fed wants. I would agree that's what they want, and they want the moderation of inflation. But I do think it opens the door to rate cuts. We're looking for 50 basis points this year. But I do agree that the equity market is putting probably too much focus on that and not enough on the worst earnings
Yeah, I'm Jim Howard.
the economy. If the Fed gets this right and get a soft landing, that is good for the equity market. I don't think at this point that we're in the early part of a news cycle. We're probably still in the late portion of a business cycle.
James, although if you think this is kind of a 90s boom, and I'm sympathetic to that point of view, but a lot of us remember the dot-com crash as well. So how do we thread that needle between enjoying outperformance, maybe enjoying those secular winners, maybe it's AI this time around, but seeing the script end differently?
Yeah, Kelly, these don't end well, but they can go on for a long time. In productivity growth cycles that are usually led by tech, oftentimes GDP growth north of 4, which is where we are. And think about this, in the 90s, we had 10-year treasury averaging 6% during that period, inflation at 3.5. Same setup. Again, that's why I don't think the Fed needs to do much. We think we're early in the cycle because of this margin expansion from AI. But I think, here you sort of have to think, where are we in that cycle to manage risk? We think it's the very early stage. The first year of what we think is a 7 to 9 year cycle. That's typically how long business cycles last. And so PE ratios are still reasonable for most of the market, not the Magnificent Six, but for most of the markets. That tells us we got a long way to go. But we're going to have to be, as street investors, let's be careful about PEs versus growth rates as we go forward. I always suggest use stop losses, but that's more of a tactical thing that we do. But yeah, manage risk as we go along, but we're early stages.
Kathy, how much do you trust these inflation numbers, the core number at a 0.3% after three consecutive months of 0.4%? It is a small decline by any standard, obviously.
I don't trust him. That's a good question.
The kind of momentum we're likely to see, and a kind of momentum that is going to allow the Fed to do as you think it will, and that is cut rates maybe beginning in September.
Yeah,
that's a lie.
I mean, we really need to verify that. I think
yeah.
You hope, you like to say trust, but I think you hope that this continues. And I think there's good reason to think that the really strong numbers we got in the first quarter are sort of anomalous, that we're back now to a disinflationary trend. But, when you look through the data, what really kind of bailed us out in a sense was core goods, right? Goods inflation actually became more deflationary. You look at the service sector, it's still pretty sticky, cooled off a little, but if you look at rental prices, transportation costs, medical care services, they're still running high. So I think we continue to trend lower, but it's probably going to be frustratingly, slow, enough to allow the Fed to cut rates, but we're still going to kind of struggle a little bit with high service inflation.
Kathy, I was struck listening to James that he thinks we're still early cycle, but you were just saying a moment ago you think we're more late cycle. Can he be right?
So, from a macroeconomic perspective, what we look at was the unemployment rate, for instance, is still very low. Yes, we've seen a few ticks higher, but to me, there's still stretched resources in the economy, and we still have inflation high, and it's hard to see a new cycle start with those dynamics, right? And the Fed's looking to pull things down, so that to me, that means slower growth. Usually in the early portion of a new cycle, you get very robust economic growth. And the Fed really wants just the opposite. Otherwise, we're not going to slow inflation down. So I guess you have a little bit of a healthy debate here, whether we're first at the beginning of a new cycle or still the latter part of a previous cycle.
James, the final word?
Yeah, I love the debate. I love that we're both on different sides of this. And I think that investors want to be really careful here about being too bearish or not confident enough. There is $6 trillion in money market funds sitting on the sidelines that should be in equity markets. And sooner or later...
I can't write off eyeglasses, so I did it right. I wanted to write it off on my business, but I can't do it. So if I don't have glasses, I can't see. It's part of my uniform.
Where we see them sort of sitting back and just enjoying the data as it
that sucks.
I think it's going to be like that for the rest of the year. And the stock's still power high.
I'd love to save $800.
Anything that can help us solve the productivity puzzle would really go right to the heart of this. Thank you both so much for your time, James Demmert and Kathy Busch-Jancic.
Well, we broke resistance.
Data, Rick Santelli on the CMO floor with the traders take. Rick?
Yes, thank you, Kelly. I'm with Jim Bianco. Jim, welcome. Best I can say is mostly as expected, sequentially lower in terms of CPI, but well above the Fed's 2% target. What did you think about the numbers?
I kind of agree. I think that what you got was some moderation in the inflation numbers, and that's what everybody's looking for. That's the good news. The bad news is we're moderating around 3.5%. We're not seeing anything near the 2% number. And what's especially concerning about getting to 2% is that this owner's equivalent rent, which we were all talking about going into the number, printed 0.4 again for the umpteenth month.
Yeah, no help there.
Right. It's not helping.
It's other outliers because they pick and choose. The market is definitely pro-earnings, pro-economy, and whether the Fed eases or not, the momentum trade's alive and well in equities.
Absolutely. You could see that in the way that with the things they pick, like they pick auto insurance to get worried about it because it's very high. But we're not picking any of the good stuff that's very, very low. We want to look at the stuff that's overstating inflation and then dismiss it We don't want to look at the stuff that's understating inflation and dismiss that. So you can see the market's bias there.
Absolutely. And, this whole thing, the market's wrong. I can be actionable at any price on the Dow, at any price on the closing prices, NASDAQ, S&P, any stock. What is maybe off course is what investors think is going to happen in the future that they price in today. And what do you think is the main thought on investors who are scrambling to buy equities?
Yeah, that they're looking at interest rates and they're saying now that rates are coming down, that competition of 5% yield should be positive for equity.
Rates are coming down, huh?
About with the bond market over the last year or so is every move has been an overreaction.
One of my credit cards went up almost 12%. I'm
380,
going,
I'm talking about
what?
the 10-year yield. 380 in December, 475 last month, now 435 now. The bond market just doesn't turn around and move the other way. It doesn't adjust. It doesn't have a new range. It has these wild moves in one direction or the other.
We have 1 minute left for my favorite question I've been saving to the end. What if we never can get to the 2% target of the Fed? Where's the end game there, Jim Bianco?
Well, the only way I think we get there is with a recession and you kill demand. But assuming that that's not the
Yeah,
case,
but then when the recession's over, I would think it's going to go back up.
Right. I think then the realization might come in that the Fed is only slightly restrictive at 5.25 to 5.5, and maybe 2 rate cuts or 3 rate cuts is all they need to get back to neutral. That 4.5 on the 10-year note might be neutral, and that if the economy speeds up, we might have to see much, much higher interest rates.
Okay, the CPI is well above the 2%. What the heck?
Even on inflation, let alone zero. Everybody's kind of realizing.
Sounds to me like you think basically the rally in Treasury price and the rally in stocks was mostly because of the fact that it wasn't worse.
Right, exactly. That's what Powell said yesterday. He said, I'm not going to raise rates. Oh, good. Let's rally the market because you're not going to raise rates.
Well, I said that too, though.
Well, there we go. We just summed it up for you, Kelly, from Chicago.
That's what I said earlier. I said it doesn't matter. Just the thought of it's not worse is great in this market. And that's just so frickin' unprofessional. China. That $12,000 car. They're getting back at us. I mean, cars are outrageous right now, the cost of them. Used cars are up 30%. And they're sitting here telling us that everything's just not bad. The government debt might take a higher borrowing cost. Duh. What is it? 1 trillion a day? Billions a day in tax and credit debt. I'm kind of happy that China did that. Suck it to them. We had the big protests so they can get higher wages. So your car's going to have to cost more. I mean, if I'm going to spend 60 to 80,000, I'm going to get a Lamborghini. Screw they. I'm going to go get my food. 947 on NVIDIA, new highs. Oh gosh. Okay, well, here's our first biggest candle here on the SPY. Mike? What's the SPX doing? God, look at the video. Now the platform's going to screw up. Ah, darn. The SPY puts are up. No, they're not. Not much. 10 cents. Oh, the 525s. Okay. Yeah, I was looking at the wrong one. So now it'd be the 527. Or the 526 at 37 cents. Okay, I'm watching the SPX here. If we break below the 63, well, we've done it a couple of times. So this is what I talk about stop losses. I would take the trade under the 63, but I'd have to draw a trend line from here. This is what I'll do. Yeah. I'll wait until it breaks that white line. And on the SPY, did anybody get stuck in my puts and got burnt in the room? Anybody in puts? Great job, Rob, or R. Don't be in them yet. I guess nobody's got stuck in my call. Puts, huh? How about YouTube? Anybody on YouTube got stuck in my put call there at first of the day? I'm just the only idiot. You did, Ricky? Did you get hurt? Did you get out? Took it. Okay. I'm sorry about that, Ricky. I feel pretty bad about it. I was totally confident we were going to pull back, but I was wrong. No. They're still buying this thing. We can go down. We got an expansion pattern. I mean, this is going to go down to the 200. I just know it is, but damn, I don't want it. Not doing it.
Chinese competition.
Well, it's interesting you say $100,000 because I believe that's how much Ford is actually honest or losing on every EV they sell on a net basis. So it's pretty bad.
Ford losing $100,000 on every EV they sell because they pay their employees too damn much. And the inflation, and they say inflation's down, they're full of crap. $100,000 on everyone they make, they're losing. And China wants to put one out for 12 grand. I'm loving it. I mean, I used to love the car industry, but GM's been bailed out 3 times, and this will probably be the 4th coming up. I mean, my uncle back in 1970 was making 60 grand a year working for GM. I mean, GM. 60 grand a year back in 1970. and Flint, Michigan. And then look at Flint. It's a ghost town. We sold our family house for $5,000. I didn't know it was $100,000. You gotta be kidding me. And they put tariffs on China.
So you kind of answered my question, but I'm going to ask it anyway.
Tariffs
You're talking
backfire.
to a lot of car dealers.
Yes.
What do dealers tell you about the current market, and what are dealers telling the manufacturers about what customers want?
It's a good
Dealers have
question.
been very vocal that to the manufacturers that they have overswung the pendulum within the EV market, right? I want to be very clear. I think there's phenomenal EVs on the market, and it's a growing market, and I think it's going to continue growing, but the pendulum swung too far, right? We overbuilt supply of the EVs that people don't want. Many of these are, frankly, Tesla has been the leader. They still command about 50% market share, but even they have dropped their prices, 20 to 50% over the last year and a half. And so, EVs are consistently higher.
Paid the higher price. Yeah.
I'm sorry to hear that, but yeah, it's many dealers.
Well, you're an
in a
idiot.
Similar boat.
Anybody, okay, he's whining about him had to pay the higher price for a car. A computer, flat screen TV, when they first came out, you're going to pay $3,000 for one. A computer, I mean, this new Meta thing or Apple thing for $3,500, you're going to pay that. I mean, it's just normal. Any new item, you're going to pay more, and then it's going to end up eventually cost is going to drop. So you can't bash Tesla for doing that. I think it's great, but I didn't buy a Tesla when they first came out either, because I knew they were going to drop. So, don't be whining, buddy.
Short squeeze climb. More on that move next as we head to break.
SunPower,
Celebrate Asian American
SPWR.
Hawaiian and Pacific Islander Heritage Month. Here is Clara Schott, Salesforce AI CEO and a CNBC changemaker.
Initially, when I came to the U.S., I didn't speak any English, so I had to listen first before I spoke. And I think that's allowed me to observe trends happening as they unfold.
254,
what I'm doing,
255
what I'm working on. And that's how I think I was able to kind of
for
see the early social
SPWR.
media wave and then more recently on the AI side.
I got an alert for 255 for SPWR off the 200 SMA on the 1 hour time frame. I'm going to redo that alert and type that in. I'm going to make it for 260. That way I'll be pre-alerted. So put it at mark at below. This ought to be a good bouncer. 200 SMA on hour time frame. Yeah. 261. Man, I feel so stupid getting in that thing today, but oh well. I think that's my first major loss of the year. Not major, but my first really stupid play of the year. Mike.
Affirmative. One of them.
Yep. But I made it back. And that's because of you, Mike. Or somebody said in here, you know, if trade ain't working, get straight over to them calls and start buying them.
NBC. We got some big moves in the solar and commodity space to tell you about today, and Pippa Stevens has the names for you. Pippa.
So the first one is Nextracker. This is a rare bright spot in the solar industry. They reported last night beating top and bottom line estimates. CEO Dan Sugar told our Jim Cramer last night that their backlog has more than doubled. And so the reason why they're doing well is because they create these sophisticated trackers that then follow the sun throughout the day. And so then developers want to use their equipment because it means their solar arrays are that much more efficient. Now on the flip side, SunPower down more than 20%. This comes as the meme stock rally fizzles. They were caught up in that yesterday. Shares were up 60%. It's important to note here that about 80% of their outstanding shares are sold short, and also only 25% of the stock is available to the public. So this really is, a kind of buyer beware. Then moving over to copper, that did hit a record high today. We've seen this enormous rally at more than 20%.
Girl, you need to put on some weight.
But it does feel like this latest move is driven.
You do not look healthy at all.
Like after copper traded sideways for so long that it now has been reset a little bit, and it's going to be, higher lows looking forward just because of that energy transition and data center demand drivers.
Copper is the new meme stock.
Yeah.
Watch out, uranium.
Yeah.
Uranium Twitter. They've got a
Okay.
about copper Twitter. Pippa, thank you very much. Pippa Stevens. Let's get to Bertha Coombs now for a CNBC News Update. Bertha?
Hey, Kelly.
Bertha.
U.S. officials say crews have begun towing a floating dock system into the waters off the Gaza Strip, and that it should be installed in the next 24 hours, allowing for the delivery of humanitarian aid into the enclave. The dock will be anchored 3 to 5 miles off of the coast and will be moved from the dock to a causeway on Gaza Beach. It comes as the UN says there is a full-blown famine in northern Gaza after 7 months of war.
1, 2, 3.
In Texas, a barge hit a causeway and has caused an oil spill. That happened this morning. The incident led to the closure of the Gulf Intracoastal Waterway, a significant commercial maritime channel in the area.
Oh my God.
Police are also blocking the road, which is the only bridge for traffic on and off Pelican Island.
Another one?
The Education Department has extended a deadline to apply for student loan forgiveness. Borrowers can now request a loan consolidation by June 30th.
1, 2, 3. 1, 2, 3.
Federal student loans into
We're in the
one
sweet
federal
spot.
loan and could help them get their debt.
We're in the sweet spot here on the SPY. We've got a hammer. It's kind of hard to predict what I'm an abnormal market. It dropped 2 cents. I had it at, I was watching it at 37. Now it's at 39. The 526 strike. You cannot let the bears take control. Ricky, did you lose a lot of money? Ford. Uh-oh. I better stop bad-mouthing Ford. Johnny. Big C. Mike told you earlier this morning that you were nuts. Oh. But I refuse to listen. Well, I am a little nutty. But I really thought I had something. You can give me an F. You already did. That's funny. Our brains were thinking together on that one. I got a fold wedge. It's a bold flag, man. You can't be taking a put on this. Well, Brandon, what are you going to do, man? You made it to where Americans can't afford to buy a new car. Unless you have money. I think I could have bought the same Volkswagen if Trump was president now for probably 10 grand. Instead I paid 14. Bull flag proved us right. Meta's up $9. And Lily, great call, Mike. Yeah, I will take a little peek at the internals in the bond. I was thinking about the bonds yesterday and this morning. They were talking about them, but yeah, I need to start learning how to follow them. I think that'll help me a lot. And I knew, that they're fudging the numbers. I still think we get to the bottom of this, but I ain't going to do much trading here until I see something. I got to think about it tonight. Where did I go wrong? So Biden puts tariffs on the EV cars in China.
China.
Yay. Really, that's not a bad looking car, man. Heck yeah. I mean, this is perfect. Yep, I agree. My gut was wrong. I'm going to do a video on this one here. Oh man, Disney was already down, Florence. I didn't see that. I just looked at that chart. So I'm going to change my support level. We already hit that lower 100 mark. So maybe the shoulder line at 102.25. Yeah. I wish I was, yeah. Did you hear me, Florence? I'm going to send you the chart. Well, I'll put it in the room and I'll send it to you. Disney hit that lower support already. So we're going to change the support to 102.26 for now. And I'll jump in it with you if I'm ready. But that's not good news for Disney Plus. So we got to let this sink in a little day or two. That's not good news. I mean, it's not. It is and it isn't. Cut costs is always good, but if you're going to lose subscribers, it's not. Right back. Head and Shoulders on the Russell. How you doing, Percy? You got 531, 530. You still in those puts? $531. Oh, that's God. So that probably didn't get hurt as bad. I might have to think about that. I think it's going to stay in this channel. We got 10 minutes to power hour, and I'll be right back. Yeah, I wouldn't be buying puts. I'm just going to leave it alone. It'll probably come in right at the end of the day. Oh ho. Like nobody's business. Yep. Today's definitely a new day for me. I was wrong. I called a bear flag this week and didn't get it. A bull flag. That's what I was looking at. And I thought how this week was going to come down. This is what I thought was going to happen. So we had a bull flag here. And I thought we were going to have the same thing right here. But at a higher level. And I thought we were going to come down and come back down here and then break out for the third time. But now, I mean, second time. Now we've got up here a double top and we broke resistance. Not as I planned. Wonder what this is. Huh. I was down about $1,200. I made it back to 300 down on that spike put. But I had put $5,000 in it. Spy says it's ready to go again. Go, go, go. Well, it's not been my best week this week of calling calls. I mean, it's okay. I'm definitely looking okay, but I mean, it's not been my best. Because I come in here thinking we were going to be a little bearish. That's Goldman Sachs. Almost a 100-point gain in a short period of time. A month and a day. It's up what? 25%, 30%. That was a good song, man. That was a good choice. I love that one.
It's the NBA playoffs.
And everyone's asking.
I'm not asking. I don't give a crap. Oh, there's Josh.
Since 1985. It's a fairly rare phenomenon, but when it's taking place and you're out of the market and or underweight, it's deafening. You cannot sit there and watch that go on, and not just because you feel a certain way, but there's an agency problem in investing, which is when you're running money for other people, they have expectations, and one of those expectations is you better not trail the SPX by 1,000 basis points, otherwise you're fired. So we can all pretend that doesn't happen, but those of us who have been here for a while, Cameron will tell you, this is a very real phenomenon, and I don't think it's played out yet.
I think you're full of shit.
So I think that we have to appreciate that there are these tailwinds of momentum, the fact that the market is not overbought, that breadth is getting better, and that
The bread's getting better. I keep going back to his Uber call. I mean, he was delirious on this stock. We were going to break the triple top. They only bring him out when the market's good. Josh, I used to like you. But it is a phenomenon and something I'm not aware of or used to. This rally. I mean, I've been through a lot of them. Here's my SPX put. And it didn't move. It actually went down. That's a paper trade, 526. Oh, that was a SPY. 526 SPY. And what I had the put too on the SPX. Oh, I did not. I thought I had the put on the SPX. Yeah, the SPY one's down 5 cents, 4 cents with this new low.
Situation where revenues are coming in, give or take on target, but earnings are exceeding by 7.5%, 8%. And it's not one sector. It's not just quote unquote the NVIDIA phenomenon. It's happening all over the place. I think that's an underappreciated aspect of the landscape over the last couple of years, and it's probably the thing that the bears despise the most, because even though we all got this wrong, they didn't have that on their bingo card as the...
He said it. We all got this wrong. I didn't, but now I did.
More rate cuts. Turns out that's not the correct answer. The way the Bears lost was earnings growth outperformed. Last thing on this, Judge, if you were to ask me, if you were to say...
He was one of them that was saying if we were going to get 6 rate cuts. He was one of them. And that's why he said the market ran. And now he's saying it's not. It's not the reason.
You got right now all the bond proxy stocks doing really well.
And it was earnings.
And you
I
got
agree.
stocks outperforming. Semis and tech are the two best sectors, up 3% and 2%. The home
I said
builders
that
are
months ago.
also highly interest rate sensitive. So this is one of those cut on days, and courtesy of the data, which by the way wasn't that cool, but cool enough.
Even where revenues have been
wasn't that cool, but cool enough.
Or not where they once were. Case in point, Apple. Let's show the intraday chart. You've had, in Josh's words, these levers to pull, like a big buyback, the biggest on the street. Stock back above 190 earlier today. It's right at that level, and there it is for the first time since February the 7th. Big Technologies, Alex Kanchowitz is a CNBC contributor. He's with us here at Post 9-2. It's been a pretty remarkable turnaround. Since the lows in April, this stock looked like it was kind of left for dead. Some were calling it dead money. Surprise, it's back.
Yeah, I mean, that's what happens when you buy back $110 billion in stock, right? I think you could almost call it the Tim Cook put. They're just not going to let Apple get underneath a certain level, and I think you saw shareholders respond in kind. You add to that the fact that we've had this rebound in the market. People are going back to previous leadership, and that's Apple, and there you go. You have Apple above 190 today.
Should we have doubted that people were going to go back towards the leaders of yesteryear, so to speak, because this has all been about, we're talking Nvidia,
Intel
through the moon every day. Apple is kind of left out of the conversation. Now the market doesn't need Apple. Apple, who knows, revenue growth down 3-4 straight quarters. Maybe the best days are really behind it, and here we are, stocks roaring back.
I think people use Apple like they use treasury bonds, honestly. I think when there are better trades to put on, Apple loses market cap, and we see people run into like Nvidia and AMD, and then the semiconductor rally falters. They're not going to sit in cash forever. They go back to what they know they feel comfortable with. That's Alphabet, Amazon, and Apple right now. And those stocks it's weird. They shouldn't act defensively, but they have had that defensive tenor. What's really frustrating for the people that don't like them, on days that are risk on, they also go up. So it's really tough. If you're in a position where you're like a serial underweight of the best 5 companies in the world, and like that's your investment strategy, I'm gonna underweight these things because they're expensive or whatever, it's not fun. Like, you are not having a good time. You're probably on Stone Street in an hour from now, throwing back whiskeys, because you're watching this day at this grind higher. These companies are not growing the way that they were, and yet people are using them as like a safe haven and or an equity investment, like both. It's crazy, but that's what's happening.
What do you make of this sort of return to what's worked, right? And that's what really has been. Josh was talking about, technology being certainly a leadership on the week. It's a leadership today, and it seems like the money's starting to flow back there again.
Yeah, tech and the new tech, which is now officially utilities, are the only sectors that are outperforming the S&P 500 today. Every other sector is underperforming. That's important for the market overall because tech is such a big part of the market at 30%. But we think fundamentally at its core, this market is all about earnings growth revisions, which is that you are still seeing earnings growth go up for tech, which is helping bid tech higher, even though it's extraordinarily crowded and it's expensive. We have to appreciate that because at some point, earnings revisions may turn
She's
lower
been laying
like
out
they
at
did
the
in
pool or
2022,
something.
and that's when you could see a true
Oh, she's got a lot of makeup
sector, at least
on.
for a period of time. We're not seeing
Man,
that,
that don't
which
look
is
good
why
at
we
all.
shake off crowded positioning and high valuations.
And Alex, we're reminded this week of why we got here in the first place in terms of AI, right? OpenAI has their day. Then Alphabet has its day. Microsoft's going to have its own. And then, of course, we're going to be talking about Apple itself with WWDC. Is some of what we're seeing in Apple just getting ahead of that event?
Yeah, and I think the most underrated piece of news this week, if you're watching Apple, is the fact that OpenAI released a ChatGPT desktop app. And which operating system did they release it on? Windows, which Microsoft owns, and Microsoft's funded them with billions of dollars, or Apple? They released it with Apple. And there have been these rumors that OpenAI and Apple are going to partner on some sort of Siri partnership. And you imagine bringing this new OpenAI ChatGPT technology, which can sense emotions and seems to interact with you like a more normal person, versus Siri, which has been a disappointment for so many years. And you start to see the possibilities. Maybe these two companies are coming together, and Apple does have a vision for AI, the types of which we haven't seen them admit and talk about until now, but maybe that's coming next month.
Is this helpful to the situation that Apple is currently in, where they need to sell more devices, period? Like, we could talk about services all day long, but the narrative around Apple is until they find a new way to get people to upgrade their iPhone faster, it's going to be one of these stocks where people are perennially just looking at like, well, that's fine, you're not growing.
Well, that's because the iPhone's still half the business. So that's to Josh's point. That's why it's half of revenues, isn't it?
But so the iPhone did drop 10% last quarter, and I understand this question. It makes a lot of sense. Here's my perspective on it. We're not going to see an immediate upgrade cycle on iPhone immediately because of this, because all this stuff was built on 2017 technology, the Transformer model. And think about it, my iPhone right now, I got ChatGPT working. I have Claude working. So do I need to buy the iPhone 16 to get the new Siri working?
But Siri is terrible.
But it's going to upgrade overnight because it's not necessarily the fundamental technology on the phone that's changing it. But I do think you do have a long-term story.
We broke out today.
Apple's going to tell
Apple
developers,
did break out today, Mike.
We're going to enable you with our own technology. If you build an AI app on the iPhone, it's going to be the best AI app that you can build. So I think that's going to happen, but it's not going to be an overnight turnaround. I don't think the iPhone 16 is going to be the thing. Maybe the 17 or the 18. That's where you really start to see the impact.
Cameron, what about these other sectors that have done really well over the last month? And it's not, I mean, utilities, they stand out. It's up 13.5% as a group, but financials over 1 month, up better than 5%. Healthcare, up better than 5%. You've got Staples up near 6% too. What should we make of that, and how should that maybe color the way we look to invest in what might be the next leg of this bull market?
Yeah, I think we should appreciate that they are under-owned, because all of those sectors that you've listed have had outflows over the last 12 months where you've seen the inflows go primarily into tech. The one that stands out that is a little bit eyebrow-raising and concerning is consumer discretionary. It hit new relative lows today on a day that retail sales disappointed. Amazon weaker on a day that the e-commerce line and retail sales were weaker. So it is still a bifurcated market. It's not a rising tide that lifts all boats, but you are seeing better trends out of financials given the movement in the yield curve, industrials, some better support in manufacturing. So pick your spots carefully.
You called Amazon the other day the new Apple in terms of the way that stock was reacting.
Yeah, I mean, Amazon is not currently being appropriately valued given how important AWS is going to be to this AI build out that's going to take place over the next 5 to 6 years. The Anthropic stuff, and then just the AWS mentality of bring your own large language model, will make it work here. Like that's going to be very advantageous, I think, to the company's efforts to monetize AI faster than most of the other companies that are saying, hey, look, we're AI. I would also point out cybersecurity very quickly on this same theme. Very underrated. Cyber threats are just absolutely exploding.
Underrated?
Well, I think underrated in the conversation about AI. We can all be excited about, ChatGPT powered Siri or whatever's about to be announced next, but we have to all remember the threats with AI will be amplified as well. I want to point your attention to a new all-time record high currently being printed in CrowdStrike. This is a stock that's up 4% on the day with no news. This is going to accompany the AI rally. You're going to see one of these cyber companies becoming a massive market cap. Hopefully it's this one because I own it, but I think that whole area of the market, it's not the sexy part of AI. It's not the chatbot that sings happy birthday to you,
hey,
like Marilyn Monroe.
It's not a utility, okay?
No,
just relax.
Yeah, it's no utility. but listen, as bullish as we're all getting on the potential for these massive platforms monetizing AI, let's remember the protection that they're going to have to pay, mafia style, is not going to go away.
I got another story that you guys are going to want to react to. Julia Borston's going to deliver this news alert for us regarding Netflix. Julia, what do we know?
Well, Scott, Netflix announcing in its upfront presentation that its ad-supported plan now has 40 million global monthly active users. That's up from 5 million a year ago and up from 23 million in January. The company is saying that over 40% of all sign-ups in the countries where they offer ads now come from the ads plan. The company also announcing that it will launch an in-house ad technology platform to give advertisers new ways to buy and measure their impact, telling us that they plan to move entirely over to their own collection of tools to manage digital advertising by the end of 2025. Sounds like it'll be a gradual shift. Now, Netflix is also expanding its partners for selling ads on its platform beyond just Microsoft, which was its launch partner, saying that this summer they will also add The Trade Desk, Google's Display and Video 360, as well as Magnite. Scott?
Julia, appreciate that very much. There's a nice pop there for Netflix. I love what our colleague and friend Carl Quintanilla posted about 5 hours ago on social. The company that once said they weren't interested in 1, original content, 2, advertising, 3, password crackdowns, 4, live sports. Well, things change.
Well, 2 things on that. They make more money on the ad-supported tier, it turns out. They actually would prefer it. If it's okay with you, please subscribe, pay us monthly, and also watch these 3 ads. So that's number 1. Number 2, I don't know if you remember this, but we talked about when the ad tier finally came into view after that huge earnings miss, and they were finally like, okay, we're going to explore it. They ended up hiring Microsoft. And we all pointed out at the time how important that was probably going to be, and that Microsoft was the technology that Mark Zuckerberg actually relied on when he needed to build an ad business into the original Facebook desktop and app. So this is a situation where Netflix pulled it off. They found the right partners, they found the right price point, and now they're making more money doing this than anything they've ever done before.
Slow uptake maybe at the very beginning of the ad tier, but maybe we're finally here coming around.
I mean, the growth is undeniably very impressive, so we got to give Netflix that. To me, hearing Julia, the thing that I was most encouraged by was the fact that they're going to invest in their own advertising technology. Having used that platform, one of the things I've seen is you can go by those ad slots and nothing serves. That shows me that they're undersold. They need more partners for demand, and that's what they're going to go with right now with the Trade Desk and Google, in addition to Microsoft. And they need better technology to show advertisers you're going to be able to buy television-style advertising, and you're going to be able to track it the way that you track internet advertising. If you do that on a base of tens of millions of users and provide them with this digital style tracking, you're really cooking.
This is
and that's where Netflix is going to be.
Alex, this is still the thing. If I'm buying network ads, I have a rough idea, according to Nick Nielsen, of who might be seeing those ads, but that's it. I have a rough idea. If Netflix can literally tell the advertisers, this is the age of the 4 people living in the household, and this is which of those 4 usernames just watch 2 hours of this content, and here's the other things that they watch, and here's what else we can infer about this person, that accelerates the ad revenue from traditional television and cable.
In public companies about going private. We might be losing some names here. Joining me, Guy Eric Hirsch, the co-CEO at Hamilton Lane. Eric, thanks for being here on the Schwab Network. Tell us about what you guys are doing at Hamilton Lane, and as public traders and investors, what we can glean from that.
So thanks for the invitation. Appreciate being here. So Hamilton Lane is one of the world's largest private asset managers. So we are helping both institutional as well as individual investors access the private markets.
Yeah.
And as you noted, the private markets continue to get sort of more exciting. They're growing, and the opportunity set remains very attractive.
Seems like a lot of the discussions that we've been seeing in publicly traded companies is about finding potential private market suitors, I think namely about Paramount. And then at the same time, there was a lot of hope that there were going to be.
Okay, we're in Power Hour. I'm going to go over the Tony and Jim watch list. AMC, still looking good on it. I'm going to sell them here soon. GME, bounced up off the bottom. Apple, broke major resistance level today. Here's my support. Skip the SPY. AMD. Boom. One, two, three. We broke that resistance, barely. PLTR I'm hot on. BB. Set an alert off the 200 SMA. I'm going to set it right there. 305.
Causing investors to shift the way they think about building their portfolio. We've always kind of been growing up and sort of taught public markets are safer, private markets means venture capital, it means illiquidity, it means a lot of risk. But I think investors are sort of looking at data and they're taking a different perspective. I think one, liquidity and the desire for liquidity is actually dropping, not rising. And the outperformance of private markets versus public has been substantial. And so I think people are willing to sort of take that illiquidity trade-off for much, much higher performance. And again, thinking longer term.
And where's the evidence that the performance will be stronger in private markets for some of these companies that we've been discussing lately? Again, the Paramount move, kind of one of them. Give me kind of an example of like why a business like that might function better private.
I went and got the lens for reading computers better.
Yeah, if we widen out that lens and you look at private equity performance
versus public equity performance, and you take that over a 5, 10, 15, 20.
I can't listen to these guys. Not in the mood. Me and a friend wrote a song one time. We called it, we had days a whole lot worse. Somebody else has got a whole lot worse. A song called A Whole Lot Worse. But we had a song called Days a Whole Lot Worse.
Hi, we're Visible, the wireless company with nothing to hide. Get unlimited 5G data powered by Verizon.
You want to know about bad? When I was a young girl, about the age of 1, I shot up my crib with a BB gun. I never behaved, never followed no rules. They kicked me out of 9 nursery schools. Every year for Mother's Day, I steal my mother's purse. She steals her mother's purse. So if you want to be bad, you're gonna have to do a whole lot
worse.
Just general.
Still, we had a 1, 2, 3, boom, to double top. I'm afraid to even read candles right now because they're not telling me the truth. We had a couple good ones here. See, a little hammer there. She goes up a little bit. Another hammer goes up a little bit. You got a 1, 2, 3. I would have took that trade maybe, but then it didn't come all the way down. Been a higher low, you know. So, yeah, it's not my reading day. What's that? Was it COSK? COSK had a good day today. Breakout, pullback, snake. BYND was another one of the pumps. Yep, they came back also. See what's in the red. SLNA moving. Or you got your mic on. Damn, look at it go. SLNA. There's not much volume on this thing at all. It is today, though. I don't want to take it. Hospitality, the revenue. 49 million, not bad. It's got revenue. It's got revenue, that's fact. I can't trade it. Now, Jimmy called out Mira this week, Mike. Need to focus. We definitely broke resistance on it. This sucker can get to 21.
All right, we haven't talked much commodities yet apart from gold. Let's bring in Scott Bauer and chat about the rest of the market, CEO at Prosper Trading Academy. Scott, all right, good to see you again, sir. Copper hitting above $5, giving a little back, but I guess we should start there as a record-breaking move.
You know what? The commodity bull is back, at least, short run here. There's a lot obviously being talked about with meme stocks and shorts covering. And you might see that with copper here as well. There could be a little short covering after we had, reached some of those lofty levels. We saw it back off a little bit, and now all of a sudden here we are again.
Yeah, this is really impressive for copper. I mean, crude inching back to $80 as well. Kind of trying to stay in the mix here. Ironic that we're getting records in such a key tool, material like copper on a day we're celebrating inflation. It's kind of weird.
It totally is, and especially when you look at some of the numbers coming out of China once again. Recently they've been good, but of late we're starting to see some caution again here. So we know that the price of copper can be pretty directly correlated to what's going on over in China. So yes, I think what we're seeing today, is really a standout.
Yeah, true. China trade has really been rocking. Today again, still up.
They're buying them. SLNA.
Gold, pretty good trade here. What do you think, Scott? How do you approach gold as well, which is ripping again? Fresh breakouts there too.
Boy, it seems like every corner you turn in the marketplace, things are tied directly to rates and the dollar. At least for right now. Look at gold. Look at what it's done over the last just 2 sessions after pretty big sell-off. I don't remember if it was Monday or last Friday, but after a pretty decent sell-off, that run has started quite again.
Yeah. Bitcoin, finally,
There we go.
Last week I said that stocks could use cool inflation, but Bitcoin needs it the most. And I feel like that was kind of an easy call because it was missing from a lot of the risk on the past week.
Oh, there's no question about it. And, a move today that we're seeing in Bitcoin, this is reminiscent of almost a risk-off day when people would flock to Bitcoin. Now it's almost, is it risk-on? Is it risk-off? Is that where you want to be here? So, again, we're looking at something directly correlated to how the dollar is trading, to how the inflation data is and what the Fed might do. I'm not so sure this rally, though, is that sustainable just based on that, Oliver. But what I will say is on the recent sell-off in Bitcoin, when we saw it down below 62 and 61, there was more buying than there has been in a really, really long time. So I think, the bulls have got to be pretty happy about that.
Yeah. What do you think is possible here? If we're looking at stocks highs, should it be a matter of time before Bitcoin's back to its own record?
It's hard to fight the momentum. It's always hard to fight the trend. Ben says that best. So yes, it can move higher here. Can it get to 72, which is kind of that give or take area, the previous all-time high, maybe the make or break? I don't expect it to. But nothing is out of the question just based on how things are trading that are so correlated to the Fed rates and the dollar.
All right. Like it. ETH up in the mix too, so there's not a lot down today. Basically just vol in the U.S. dollar and a few meme stocks.
And rates.
Yeah, and rates too. All right, thanks, Scott Bauer. CEO of Prosper Trading Academy. All right, let's get that update on the streaming world. Netflix has got some numbers out too. Joining us, Rita Young, senior markets correspondent. Looking at an NFL deal as well. All right, Rita, we got a couple stories. Take it away.
A couple of things that actually work together to turn Netflix shares higher on the day. Now, the first one just happened not too long ago. The company nearly doubled its ad-supported tier subscriptions from January. Now has about 40 million global monthly active users for the ad-supported tier. That's up from 23 million that the company reported back in January. And in total, the company has more than 270 million global subscriptions of all of their tiers. Now, Netflix had separately also said it would launch its own ad platform. And it's no longer going to be partnering with Microsoft for that technology, but Microsoft will still stay a programmatic ad partner. Honestly, Oliver, I can see this becoming a trend at some point. All of these companies getting into the advertising game, trying to create their own ad platforms. Now, meanwhile, Netflix is no longer just in the sports adjacent business. They're broadening out their live sports broadcasting with a 3-season deal with the NFL to live stream the 2 marquee NFL games on this coming Christmas Day, and then at least one holiday game on each of the next 2 Christmas days in the next couple of years. And as we know, Netflix has shied away from this live sports broadcasting, even though its competitors have gotten pretty deeply into it, as deep as they can possibly get. And the company has opted instead for that sports adjacent content. We're talking about series like The Quarterback, Formula One, also Full Swing. But
yes,
this marks the first time that they're going head first into live sports broadcasting. And I would bet that we could see a little bit more.
Yeah, we got the Jake Paul thing coming up, Mike Tyson. I mean, Netflix really wants to get into the living room with the fam watching.
Yeah.
And doing the Christmas Day games in particular, seems like they want to make sure that the whole family is aware that this is the way you got to watch now. So
yeah.
All right, and we're going to get the full NFL schedule today, I believe, is dropping.
We are later today. We'll get it.
Okay. All right. Well, thanks for the heads up. Big subscriber growth too to the ad-supported tier for Netflix. Things going pretty smoothly at streaming giant, holding on to its rank. When we come back, big picture discussion with the Schwab team. Great day for it. We'll talk some more about the data and the celebration by stocks right now. Here are the levels to watch for as the index is at 5,300. The futures still have a little ways to go to get to an all-time high at 5,333. But indexes are breaking out and got records there.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon,
on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies.
Eight more minutes. $60,000, $55,000. Somebody just made a ton of money there. Mr. TTOO's been going pretty good here. Man, these penny stocks are really taking off. BITU. This ended up $130. SMCI, Jesus. Man, that's what you get for sitting on your hands, Jim. Nice breakout on that one, too. I mean, perfect. So that's going to be the pullback support right there. 881.97. Well, we'll get at it again tomorrow, YouTubers. It's just one of an extraordinary run today, which is really nice. If you were on your toes today, you could have done very well. I did okay, but I mean, I was really down at first. Then I had to go to the eye doctor. Then I come back. So, I'm just going to take it easy tonight. We're definitely bullish. We broke resistance. We broke the all-time high. Big time. Like it was a statement. So tech is probably going to jump now because of the so-called what do you call it? Inflation report, CPI. It wasn't good, but it was okay, is what Josh said. That's the way it's the way it is now. I mean, back in the day, something like that would really tear up the market, but once I got to the doctor and I started looking, I said, I'm just going to get my calls and I'm going to run these up. I averaged down on my puts to where I can get out at 50 cents, and it hit 54, and then I sold them at 48. But I mean, it took $5,000, so it was one of them times where you just have to dig your way out of it, but I didn't think I was going to dig my way out. And then we got in the calls, and I sold them way too soon. And the first put I did real well with. The second one I got stuck in. That's the one that killed me. I probably shouldn't have traded because I knew I had to leave. But I got, y'all said it clear, you know, I wasn't paying attention to the chart or to the momentum. I assumed, and you never assume. I said, wow, you know, this is way too much. I'm going to go ahead and buy the put and get out of these. It didn't work out that way. It just kept going and 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 going, didn't stop. So we'll catch you later, alligator.